Testing 1 2 1 2 1 2. Mic check. Mic check 1 2.
I'm not with the airport now. I'm not hearing you here. Can you hear me? I'm playing it. Huh?
One, two, testing, 1 2. Good morning, everyone. I'm getting a return. Okay. Good morning, everyone. On behalf of MTN Nigeria, it is my pleasure to welcome you to our Capital Markets Day 2023. Has it started?
Yes.
They're just starting. I'm on. But it's not time yet. They're testing. So this is a test run for us to make sure that the whole and we're in good state to commence event of today. Thank you very much, and God bless you. Is that okay?
Yes, very good.
Okay. So let me sit somewhere and wait for the time to. Maybe there should have been a screen here.
Well, distinguished ladies and gentlemen, please, as you come in, take your seats. Take your seats. Let's begin to settle down. We might start in a few minutes. Please come in and take your seats.
I wish you were here.
I'm always with you.
But it's not the same without you.
MTN MTN 5G's amazing technology will change how we experience life and the internet. Get ready to encounter the incredible, and remember, no be juju, na MTN 5G. My guy, my brother, my blood. You no get wetin fall from sky, we ground no fit collect. You know now, we have been through a lot. And we are still standing strong, nothing dey happen. You don't forget, together we overcame monsters. Found our own way through the dark with our own light. Never stayed on our knees when the world brought us down. And when hunger tigele, we found a way through the tough times, battled the darkness with hope, and survived the heartbreak of loss. You see, all these things have made us unbreakable, unstoppable. So guy, shake off that bad vibe. Face that challenge with your full chest. Because this life, now we go run out together. Nothing do you.
I remember then, when they asked me, oh, what do you want to do in future, I always say I want to be a newscaster.
There are a lot of times I've told Trust that I don't believe he can't see.
Trust is always ready to do something extra. He's always coming out to say, can I do a bit more? My mind was, where will this stop? How can I be girl with a blind child from this age? How will I cope? He will always come to me, Mommy, I know I can't see, but don't bother me.
My wife now said, let him just go to village and relax. As they were going, he had acid. And the one that Trust was following, I lost the boy in the acid. When the scholarship came, it's as if we put water on a dry pot. That's how our joy was bubbling. If not, I don't know whether Trust could have graduated with his colleagues.
Life is a journey. You have to make that journey work.
Welcome, ladies and gentlemen.
Please, let's settle down, please. We're about to start. Can we settle down, please? Let's settle down. And so, distinguished ladies and gentlemen, we will have our safety video, and this event will start immediately.
Welcome, ladies and gentlemen, and thank you for joining us today. We appreciate your attention as we go through a few health and safety guidelines. For your well-being and comfort, please note there is no smoking in this hall. For your convenience, the restrooms are on the left of the hall. Please follow the directional signs or ask any of the hostesses. This hall is equipped with 2 exits. The entrance to the lobby also serves as an exit, which leads to the muster point beside the car park. In the unlikely event of a fire, please do not panic. Evacuate the hall using the nearest exit. Get to the muster point and wait for further instructions. Do not take risks or return to the hall for any reason until authorized to do so. Emergency medical support is in place, and our hostesses are on hand to assist as needed. Watch out for trip hazards and please be safety conscious while you move around. If you have any questions, please do not hesitate to ask any of our hostesses and report any incident to the MTN control room at 0803-200-1832. Thank you for your time and attention. Do have a lovely day.
Thank you very much. This event is about to start. Please shall we all rise now for the national anthem, please. Let's be seated, please. Your Excellencies, distinguished ladies and gentlemen, it is with pleasure that I welcome all of you. Let me welcome distinguished Senator Ikra Bilbis, Chairman, Senate Committee on Communications. Also here with us is Honorable Peter Akpatasin, Chairman, House Committee on Telecommunications. I'd like to welcome Honorable Solomon Bob, Chairman, House Committee on Capital Market. Honorable Umar Mukhtar Ibrahim, Vice Chairman, House Committee on Capital Market. Let me welcome the Central Bank Governor, represented here by Dr. Omolara Duke, Director of Research at Central Bank of Nigeria. Engineer Busoye Koka Odushote, Director General, National Identity Management Commission. Dr. Vincent Olatunji, National Commissioner, Nigeria Data Protection Commission. Hussein Ishak Magaji, Registrar General, Corporate Affairs Commission. I welcome you. Dr. Mrs. Idorian Imiyoho, Acting Director, National Office of the Technology Acquisition and Promotion. Director General of Securities and Exchange Commission, represented by Abdullahi Saad, Head, Financial Standards and Corporate Governance. Let me welcome Mrs. Aisha Remy, Executive Secretary, Nigeria Investment Promotion Council, represented by Mrs. Wange Deer, Director General at the Nigeria Investment Promotion Commission. Kashifu Noah Abdullahi, Director General, National Information Technology Development Agency, NIDA, is also represented by Mr. Bernard Ewa, Director E-Government, Development and Regulation. I'd like to welcome Mr. Ralph Muputa, Group President and CEO of MTN. His Highness Khalifa Mohammed Sanusi II, CON, the 14th Emir of Kano. Dr. Ernest Ndukwe, CON, Chairman, Board of MTN Nigeria. Mr. Carl Toriola, CEO, MTN Nigeria. Group board members that are here, MTN Nigeria board members, MTN Executive Management. I'd like to welcome some of our presenters, Mr. Temi Popola, Dr. Tayo Aduloju, and several of them that are here. I'd like to welcome all of you, distinguished guests, ladies and gentlemen. It is with pleasure that I welcome all of you to this two-day event designed to engage investors and point the way, the progress, the prospects, and the priorities leading up to the realization of Ambition 2025 as outlined. So in the next 2 days, this hybrid event will share the journey so far made by MTN Nigeria, the achievements, and the growth potential. So as we celebrate the outstanding performance of the company in the first 9 months of the year, and it's actually very, very outstanding. You have 4.8% increase in mobile subscribers, 13.3% increase in mobile data users, and 53.1% increase in active mobile money wallet. It is amazing and increased. But one thing we should know that in spite of all this outstanding performance, there were headwinds, fuel increase, Naira devaluation, and forex adjustment. But in spite of all of that, I'll welcome you in the next 2 days as MTN sets to unpack the progress detail, the prospects, and spell out the journey into the future. To welcome all of us this morning, I'd like to welcome here a man who used to be the chairman of the Nigerian Communications Commission, Head Center for Infrastructure and Advancement of the Lagos Business School, and today he's also the chairman of MTN Nigeria. Please welcome Dr. Ernest Ndukwe.
Good morning, everyone. And as we say in MTN, yellow. On behalf of MTN Nigeria Communications PLC, it is my pleasure to welcome you to our Capital Markets Day 2023. I want to specially recognize the investor groups who are here with us today. We have representatives from the Nigerian capital market, including more than 100,000 retail investors who own shares in our business. We also have representatives from the largest pension funds in the country who represent millions of Nigerians who indirectly hold our shares through their investment funds. I want to thank and welcome other investors who have flown in from international destinations to join us from South Africa, Kenya, Singapore, and the United States. And those joining us virtually. Many of you have been long-term partners of MTN Nigeria and the MTN Group. And we thank you for taking the time to join us today. Your presence is a clear indication of your interest in the opportunities that Nigeria's digital economy presents, especially at the time the government is implementing a series of important reforms. MTN and the government of Nigeria have been on a great journey together for more than 2 decades. The success of our business has been built on the visionary decision taken by the Nigerian government in 1999 to fully liberalize the telecom sector. As we have grown and evolved as a business, so has the depth and quality of Nigeria's digital economy also evolved. This is evidenced by the fact that the telecom sector now contributes over 16% of Nigeria's GDP. Today, ladies and gentlemen, MTN is evolving from a telecom business into a technology business as we pursue our Ambition 2025 strategy. MTN Nigeria remains the largest telecom network operator in Nigeria, and we recognize the enormous responsibility that this bestows on us to continue to deliver world-class ICT services to the people that patronize our services. We also see strong opportunity for growth in both our voice and our data businesses as we work to increase our market penetration and geographical coverage. Our Ambition 2025 strategy assures that we consolidate and build our connectivity business while expanding our focus on our platform businesses such as fintech, which we know the Nigerian consumers want. Our customers and their desires are the heart of everything we do and plan for the future of the business. We are proud to say that MTN Nigeria ecosystem has directly and indirectly created employment for more than 2 million people while supporting the livelihoods of people across the country. As the digital ecosystem continues to grow, our impact on the nation's economy will continue to increase. We are fully committed to working together with our partners and the Nigerian government to ensure that Nigeria's digital economy at its full potential to the delight of our customers, shareholders, and stakeholders, while also helping to drive financial inclusion for marginalized populations. Ladies and gentlemen, once again, I thank you all for your participation at this, our premier Capital Market Day event, and I hope you enjoy the sessions that have been lined up for the 2 days. Let me once more heartily welcome you all to this event. Thank you very much.
This is Nigeria, a nation bustling with potential, where opportunity and innovation converge. and it gives us great pride to be a part of this dynamic narrative. Working with our partners and other stakeholders, we've spearheaded Nigeria's digital evolution, pioneering from 3G and 4G to proudly being the first to introduce a 5G network in Nigeria. Our 5G network spans all 6 geopolitical zones, with over 800 active sites offering unparalleled connectivity to millions, sparking growth and shaping futures. Our commitment to connectivity doesn't stop there. We've extended our broadband services to over 89.6% of the population, fueling innovation and fostering digital inclusivity. We've also partnered with governments and organizations to extend telecommunications coverage to millions of Nigerians living in underserved and unserved communities nationwide through our rural telephony program. In the dynamic fintech space, our user base is 14.9 million strong and growing, with 3.6 million active wallets served by an expansive network of over 229,000 Momo agents and 197,000 merchants. Working with partners that share our vision for a sustainable future, we've initiated Project Zero, employing the latest eco-friendly technologies to reach our ambitious net zero target. As a responsible corporate citizen, we've contributed over 4.7 trillion naira in taxes, earning recognition from the Federal Inland Revenue Service as one of Nigeria's most compliant taxpayers. Our investments go beyond technology. Through the MTN Foundation and in collaboration with local communities and public and private institutions, we have invested over 26.4 billion naira into national priorities in health and education, empowering youth, uplifting communities, and supporting national development goals. This is MTN Nigeria, a story of innovation, shared value, and progress.
Thank you very much. A story of innovation and shared values. Your Excellency, distinguished ladies and gentlemen, to speak to us next is a man that believes that you don't build business, but you build people. Then people will go ahead to build the business. In spite of the headwinds, he has led a team that is motivated to achieve results. As a leader, he is like a shepherd, seasoned executive and tech commercial expert. It's my pleasure to welcome here the CEO of NTM Nigeria, Mr. Carl Olutokun Toriola.
Lights are really strong in your face here. Dear distinguished ladies and gentlemen, allow me to first pay my respects to our elected officials who have been so kind to grace us with their presence at the Capital Markets Day, and also, of course, representatives of government, agencies, MDAs, ministries, etc. I'd like to recognize the presence of distinguished Senator Ikra Bilbis, the Chairman, Senate Committee on Communications, Honorable Peter Patterson, Chairman, House Committee on Telecommunications, Honorable James Faleke, Chairman, House Committee on Finance, Honorable Solomon Bob, Chairman of the Committee on Capital Markets, Honorable Umar Mukhtar Ibrahim, Vice Chairman, House Committee on Capital Markets, Dr. Bosun Tijani, the Honorable Minister of Communication, Innovation and Digital Economy, who will be joining us later on in the program. Mr. Wale Edun, Honorable Minister of Finance and Coordinating Minister of the Economy, represented by Mrs. Oguna, GM, Director, Economic Research and Policy Management, Federal Ministry of Finance, Dr. Olayemi Cardoso, Governor of the Central Bank of Nigeria, represented by Dr. Molara Duke, Director of Research at CBN, Engineer Bisoye Kuka Odushote, DG or NIMC, my sister. You're welcome. Dr. Vincent Olatunji, National Commissioner at the NDPC. Hussein Ishaq Magaji, Registrar General of the Corporate Affairs Commission. Dr. Mrs. Idore Imiyohu, the Director of NOTAB, the Director General of the Securities and Exchange Commission, STC, represented by Abdullah Saad, Head Financial Standards and Corporate Governance. Kashifu Inua Abdullahi, DG, NITA, represented by Bernard Ewa, and Mrs. Aisha Rimi, Executive Secretary of the NIPC, represented by Mrs. Wange Dia, Deputy Director of the NIPC. To my colleagues, Ralph Mupita, Group President and CEO, the Group Board Member, His Royal Highness Khalifa Mohammed Sanusi II, CON, 14th Emir of Kano, my Chairman, Dr. Ernest Ndukwe, CON, Chairman of the Board of Nigeria, Cholo, my MTN Nigeria board members present here, thank you for attending, the executive management team, all the management staff, distinguished guests, members of the public, press, ladies and gentlemen. I'd like to thank you for demonstrating support to MTN and the private sector in your presence here today. To all of our guests and capital market operators, welcome to MTN Nigeria's Capital Market Days. And thank you for taking the time to travel and to attend this session together to get a better understanding of our nation, where we're headed, and the investment case for MTN Nigeria. Most of the content we'll be delivering will not be through my speech. This is an introduction. But I have the privilege of leading what I believe is the most exciting and exceptional organization in Nigeria, and dare I say in the presence of Ralph, in Africa. Doubtless we're in turbulent times in Nigeria with economic challenges, but the entire world is facing the same. It's, however, I believe that most of the challenges in the Nigerian economy are gradually getting behind us, with strong and clear direction from the leadership of President Tinubu, His Excellency President Tinubu, which recognizes the role of the private sector and the digital economy moving the country forward. Over the next few days, we'll unpack our investment case, and with the help of government representatives here, the policy direction of the government. It's a very busy time in the transition into the new administration, and there are many, many multifaceted meetings that are going on in many territories. The Central Bank Bankers of Africa are meeting in Togo, the Ministers of Finance are meeting in Angola, there's some meetings going on in Cairo, and the chairman of the FIRS is in Doha. All of these meetings are going on to engage with their counterparties and address the economic challenges that face our country and our continent. But as much as possible, the government officials have sent in representatives here to speak to the case, and we'll hear from many of them. I'm pretty sure a lot of the investors here will have a number of questions which you are looking to get us to shed some light on. And some of these may be, what is the growth outlook and the potential for MTN in Nigeria as a business? What is the impact of devaluation on our business? How are we managing our telco portfolio? How far down the growth journey of data are we, and how much further do we have to go? Is there a significant opportunity on Own the Home and fiber? What is our capital structure? How strong is our competitive position? Can our digital business scale? How is our enterprise business doing? And probably what most of you are very keen about, where are we on our fintech story and trajectory, and what do we have to look forward to? Between today and tomorrow, I hope you will have an enjoyable and enlightening experience for all of us, and most of these questions will be answered by the end of the 2 days. We've tried to design the program to provide for adequate time for questions and answers, and a lot more focus on the question and answer sessions after we deliver the key messages. So we encourage you to interact as much as possible. I'd like to thank in advance all of our speakers and the coordinators of the event for their time and participation, and look forward to an enjoyable and interactive session with all of you. Thank you, and welcome to the MTN Nigeria Capital Market Days. Thank you.
Let's appreciate him one more time as he takes his seat. We thank you very much. Thank you. I'd like to welcome here Mrs. G.M. Ogbonna, Director of Economic Research and Policy Management, Federal Ministry of Finance, who is here with us. We welcome you. Your Excellencies, distinguished ladies and gentlemen. Well, the CEO said that he will just talk to us about MTN, but the major presentations will be coming from very wonderful people who have come here to share their thoughts. And the first of such is a scholar practitioner. He's an economist, policy entrepreneur, and strategist. Former advisor to Presidents Yar'Adua and Obasanjo, was part of the transition team of the present administration. He is the CEO designate of the Nigeria Economic Summit Group. I'd like to welcome her to take a look at the macroeconomic story of Nigeria, Dr. Tayo Adeloju.
Good morning, everybody. Good morning. Thank you. I want some feedback. It's a pleasure to be here. Just standing on all existing protocols. It's a privilege to share this day with the chair of the group, chair of Nigeria, the CEO management of MTN, and our dear partners and board members of the Nigerian Economic Summit Group. My goal this morning, or my assignment this morning, is to jump into a macro story. With every story, you want to have a perfect story if you can. And if we were going to look at a perfect story, you might be stepping away from this. If we're going to look at a perfect story, it would likely, on macro, it would likely look like this. If we were looking for an ideal macro scenario or picture or story for Nigeria that we would all like to tell, right? It would be one that was high and stable economic growth. It would be one that had favorable current account balance, stable exchange rates, right? It would be one that had low inflation and stable price levels. It would be one that had low unemployment. And practically every development agenda in Nigeria, at least in the current democratic experiment, 1999 to date, which also kind of accentuates the celebration of the birth of the liberalized telecommunications sector, has had these as the perfect story that Nigeria would like to tell. Whether you look at the needs strategy, the Vision 2020, I think Chair Undukwe was the EVC of the NCC between the needs and the Vision 2020 story. Then we went to 7-point agenda. I think you were on your way out at 7-point agenda. And we dived into transformation agenda. We did change agenda and pivoted to economic recovery and growth plan. And then from there to, what are we at now? We are now the renewed hope agenda. But one of the consistent characteristics of Nigeria in the last 2 decades is that this has not been our story. But this is the story that we have wanted to tell. All documents, in spite of how they are crafted, all these development agendas I've mentioned, all are looking for this perfect macro story. Now, this perfect macro story has 2 presumptions, at least, that monetary policy will behave in a certain way, right? That monetary policy will be managed in such a way where, with very little government intervention, reserve requirements and policy rates will adjust supply to create price stability. And that fiscal policy will ensure that government spending and revenues are managed in such a way as to meet macroeconomic goals whilst redistributing wealth and income and allocating resources to the sectors that drive high growth. This is the basic theory of change when you discuss macro stories. Now, what is our story? Our story has been that this did not happen. As at the end of last year, we were already off the fiscal cliff for all intents and purposes. The cost push, demand pull, demand, inflationary pressure was dominant. Monetary policy kept tightening and has continued to do so. I'll come to that. Our oil sector, which was our top revenue security buffer, as it was, completely collapsed in terms of expectation. Interest rates kept rising. External vulnerabilities were amplified. And so at the beginning of the year, there were projections about where we could go, but none of the projections tell a story similar to the one we would like to tell. The story going into this year was more sluggish growth and higher inflation rates. And as you can see from story against reality, we are way worse off. Now, when you tell the longer story from 1999 to date, basically, a high growth, high promising nation in terms of capacity simply is now struggling with underdevelopment indices of the type that could be problematic. However, none of these are themselves drawbacks because Nigeria still remains a nation of immense potential. So despite of high growth, which we experienced coming out of 1999, what has happened is that because the structure of the economy, especially the structure of external revenues, did not change in a significant way, we were unable to manage economic benefits going into the second decade. As a result, we struggle with a combination of high inflationary, sluggish growth, unemployment, and some intractable challenges with liquidity. So Nigerians ultimately remain very poor. The dynamics of the Nigerian economy remain strongly oil-led, especially from a liquidity point of view. And one of the reasons why the Nigerian Economics Group talks of structural transformation is you need high liquidity to do business with the rest of the world. Somebody asked me, actually my daughter asked me, what's the problem with these dollars? And I said, well, if you don't earn FX, you can't spend FX, right? And as long as the story remains oil-led in terms of how we manage liquidity, the challenges have persisted. So you almost see a graph where Nigeria behaves as oil behaves. So in pointing to huge vulnerabilities. However, that's not the whole story. The fact is, Nigeria remains Africa's best-kept secret, according to the government that has come into office. And I think the signal we've seen in the last May through to date tells a story of where a government wants to go. So currently we're dealing with what we at the NESG call a willing reformer government. And there are some characteristics of a willing reformer. Some willingness to take bold, tough reforms, commitment to steady the course, and then a deep-seated dedication to getting the hard work done. And we're seeing all those things with this particular reformer. The government of the day, within the Renewed Hope agenda, projects that it will move the Nigerian economy to a $1 trillion economy by 2026, with a target of getting to a $3 trillion economy by 2035, and then and possibly stretching it to $4 trillion. The president has asked, why not $4 trillion by 2035? This is an important signal. Whilst, of course, Nigerians ask the question, well, it's another good target. right? But targets are important when you're dealing with driving the economic system to drive economic benefits. So, where could this type of growth come from? I'm having the freeze. Can you help me, please, directly? So where could this type of growth come from? It could come from a lot of places, but any sector that could potentially drive growth is dealing with a basic characteristic of the Nigerian experience. We critically need investment capital, but we remain capital deficient as a country. The opportunities that will shape such a GDP growth requires that we see a driving of investment opportunities like the ones MTN is presenting here the next 2 days, and that we see from governments signaling that investments will be welcome. Because, like I tell people, investment is like courting a woman. It's shy. If it sees signals that you don't want it, it's out. And so when you look at the combined NSC asset classes, we're discussing about 23% of GDP. And if you're discussing growing the GDP to 1 trillion, something must change in terms of a radical, new, bold approach to investment promotion. And luckily, we are seeing some of those top-level signals from the president. So a lot is revealed about the nature and direction of opportunities in the structural evolution of the economy. And one of the things we have seen is that the economic enablers remain telecommunications and financial services and the digital economy. This is both unique and interesting because that's why we're here, right? We're here because we have placed our strategic bet on the digital economy with MTN. And where we see this going is higher trajectories for these economic enablers as we move forward. When you look at growth trajectories of the 75% of GDP, telecommunications, and when you add digital telecommunications, you move from about 13.6 to about 16.3, tells you a story. The story is, if you want to invest in the future, these are the sectors to watch out for. There remain huge challenges in some of these sectors. Of course, in energy, it's multi-layered, the amount of work to kind of create space for new investments in that sector. Power remains a problem, especially with regulatory and policy gridlock that allows for more generation and transmission, with a huge emphasis on decentralized, multi-grid, diverse sources type power. Where are the opportunities? We think the opportunities are where the numbers say they are: in agriculture, in manufacturing, in telecommunications, because it's become like an economic growth dynamo of a sort, with huge potentials not just for yesterday but for tomorrow. So broadband deployment and penetration, driving value creation beyond voice, innovative growth, petals, fintech, fiber to home, and all its attendant services in the fourth industrial revolution opportunities, plus telco fintech combined, pose huge opportunities for investing in the future. Of course, others are healthcare, education, real estate, energy, all that can be digitally terraformed by digital transformation itself. So, when we were responding to the president on his $1 trillion economy, one of the questions the NESG wanted to answer is how could we get there? We've proposed at the NESG 4 possible pathways to a $4 trillion economy by 2035. One is export diversification and a sophistication strategy where Nigeria is creating more complex products. Nigeria is one of the lowest economic complexity countries in the world. In other words, we export low economic value-added products to the rest of the world. 90% of it is crude petroleum products and gas. The second strategy or pathway is an innovation and digital transformation strategy. And here, basically, is to be known as the center for birthing and scaling innovation around Africa and the world. And the third pathway is a subnational economic integration strategy, which is fire the states. So rather than the states coming basically to Abuja for federal allocation alone, let each state go back and look at renegotiate a productivity model where states are contributing in terms of actual export revenues. So these are potentially where Nigeria could go, but one of these strategies ties very closely to the strategy of MTN and the leaders of the digital transformation of Nigeria. And we think that that is the way forward in terms of investment opportunities. Now, in closing my thoughts this morning, some issues remain if macro stability will happen. The first is that monetary policy has to become predictable, and predictable in certain ways. We need to see a more competent management of the float regime to create price stability. We need a financial systems integrity that shows consistency, reliability, and predictability. And for that to happen, monetary policy transparency and accountability, which we didn't see for many years and we've started to increasingly see, has to be a thing. On the fiscal side, we need to see a better management of national liquidity, especially in terms of external and internal liquidity strategies. Asset optimization is crucial. Most of Nigeria's national assets are not flogged in such a way as to drive real liquidity, and that liquidity will be required for that $1 trillion economy. We need to better manage our sovereign risks. If you look at some of the reports, the JP Morgan, Fitch, a couple of the international reports, the Economist Intelligence Unit reports, etc., one of the big concerns is how we are managing our sovereign risk is not giving enough confidence, both in terms of revenue risks, expenditure risks, debt risks, etc. And overall, fiscal transparency and accountability of the system will give our external account and domestic market the confidence it needs for a boost. We have strong commitments from the Minister of Finance, the CBN governor, that this will be the case. They were with us about 2 weeks ago now, and these were the commitments they made. So because these were the commitments they made, distinguished investing community, ladies and gentlemen, NESG thinks that the future is bright with this set of reformers, and we should all join them in making economic stabilization possible in 12 months and then growth possible in the medium term. Thank you, ladies and gentlemen.
Can we appreciate Dr. Adeloju one more time? Thank you very much. And let's get him a microphone that works here very quickly. Thank you. Doctor, please. Now, this segment we just open the floor for us to engage Dr. Adeloju from the audience. You can ask a question. And our online participants can also ask their questions from this wonderful intellectual. Is that working now? Okay. Thank you.
Yes.
Okay, so I'd like to welcome you. While you were presenting, I saw a line that caught my attention. You said in spite of Nigeria's economic growth, Nigerians are still poor. Do you want to drill down on this?
Yeah. So one of the readouts of the first decade of Nigeria's economic trajectory was when we had high growth. When we had high growth in the first decade, we actually were struggling with low jobs and low inclusion in the economy. In fact, what that birthed was that by the 7th year of our first decade of growth, Nigeria went back to develop something we called the National Job Creations Plan, because most of the growth in the first decade was jobless growth. And we haven't caught up. So if you think about the first decade being jobless growth, and that's when we were growing, and then you think of the second decade that was low growth, 2 recessions, 1 pandemic, we created 133 million multidimensionally poor Nigerians by the end of last year. So one of the challenges with the structure of the Nigerian economy, even when it was growing, was that it was not inclusive. So one of the great things about the sectors that have growth trajectory is that they can all be labor intensive. In other words, they can create more jobs. But to create more jobs, we must deal with the capital deficiency. It's investments that drive opportunities, it's opportunities that create jobs. And it's jobs that leave people out of poverty. There is no poverty reduction strategy, social protection, social investment that is sustainable by itself. So the government needs to shift in the short term from the social protection investments to actual creation of jobs, because it's jobs, high elasticity jobs that lift people out of poverty. And that hasn't happened in the last decade.
You alluded to it, and the CEO of MTN also alluded to it, the removal of fuel subsidy. Let's just close our eyes and imagine that Dangote refinery starts work now. And then suddenly there's investment flows and we have the sovereign wealth fund working. Production of oil on the rise. What impact do you think this could make on our macro story?
Incredible impact. In fact, when many analysts looked at the assumptions of fuel subsidy removal, several indicators and factors were considered. One factor was local refining capacity, right? That the shift to locally refined PMS would happen quickly enough as the market was liberalized to create to close the gap in exports. That hasn't happened as quickly, and it's not all Dangote's fault as it's peddled. There seems to be the lack of sequencing of reforms to arrive where we want to arrive quickly. So, for example, production remained low. I mean, we were beginning to consider importing crude to feed into Dangote refineries, for example. So there are a sequence of economic reforms that must be coordinated together. For now, crude oil production remains a revenue risk. It has to stay up. And part of that is not an economic security imperative, it's also a national security imperative because, of course, part of the sabotage of our oil production is a security threat. But imagine a world where production went up, right, to sustainable levels. Then you can deal with existing oil swap commitments, existing forward contracts, creates some space to still supply your local refineries, including Dangote, and then that will have had an effect on the price of the market. But that's not one thing. That is a sequence of activities coordinated between several ministries to get there. So the thing about some of these macro reforms is that you can announce the big one, but you now need a sequence of institutions Petroleum Ministry, NNPC, Finance, states, national security organizations, all coordinating in the way to get the same outcomes. And I think when you do that, then the outcomes change. The great thing is oil production is back up. It went as low as 600,000. It's now back to, I think we hit 1.8 sometime last week. So these are good signals that someone is at work.
Well, you can be part of the conversation. Raise your hand wherever you are. They'll bring the microphones to you. Our online audience are already asking their questions. And this guy says, infrastructure serves as a catalyst to economic growth and development. What is the way forward to bridge Nigeria's infrastructural gap?
That's a great question. I think when we look at Nigeria's infrastructure stock, it's valued by the federal government to be a $3.5 trillion infrastructure stock, with 75% of the infrastructure being bankable assets. What we need to see is first an acknowledgement by government, and I think the president alluded to this 2 weeks ago, that government will not be able to finance infrastructure by itself. The current funding plan for infrastructure, it will take us 300 years to achieve the Nigerian Infrastructure Master Plan, 300 years. And I remember the president said at the Economic Summit, we can't wait 300 years. So we need to pivot to a model where we remove the gridlock, the policy, regulatory, and legislative gridlock to infrastructure. What that means is that infrastructure must be liberalized. Many of the infrastructure sectors are still overregulated. Why GSM worked is because we had brilliant guys like, Enesun Dukwe, a chairman like Ahmed Joda, a minister like Cornelius Adebayo, who all agreed, let the market run. And many of our infrastructure stock are in binded constraints that are legal, regulatory. The sectors are not priced in a way that investors can go in and make their money. ROIs are impossible in many of these sectors because they're over-regulated. The way to do it is do it exactly as we did telecommunications. The challenge is when you look at rail, when you look at gas, when you look at seaports, when you look at airports, everything is over-regulated. And you're asking investors to bring their money in. So what we need to see is government identifying the binding constraints to this infrastructure stock, particularly the high priority ones, to being attractive to investors. Ring-fence these investments into clear FDI or LDI projects, remove the specific constraints to investment, put in all the safeguards to policy somersaults, and take some of these projects to internationally competitive bids, where those that have the technical and financial capacity to invest come in. That's how to transform infrastructure overnight. And so if we want to see it happen, we must take Nigerian infrastructure as investment opportunities. We must remove the politics from it. I remember we were discussing privatizing refineries a few years ago, and we politicized it. We sentimentalized it. And that's not what you do with infrastructure. Investors don't invest in sentiments. They invest in good deals. And once you make a deal a good deal and it becomes bankable, then investors will bring their money to infrastructure.
Do we have anybody in the audience who will have hands up? Please take microphone. Identify yourself and your question, please.
Hello. Good afternoon, everyone. My name is Dumebi Obiago from the Africa Finance Corporation. So thank you very much for the presentation. During your presentation, you highlighted 4 sectors as the sectors to look out for to see where you have the opportunities. You highlighted agriculture, manufacturing, telecoms, and tech. So I just want to understand and know what the government, or kind of policies the government has put in place to create an enabling environment to make these sectors not only investable, but attract investment and sustain the stability of those investments and for them to reach their desired outputs going forward. Because in the agriculture sector, you have a situation whereby farmers don't have access to seed, fertilizers. In the manufacturing sector, you have companies leaving Nigeria due to the environment, and you have, across the other sectors, the key problems. So I just try to understand or just highlight what government has done or is doing to create an enabling environment to retain these investments, attract these investments, and make the sectors investable. Thank you.
That's a good question. So I spoke about 6 sectors. In addition to the ones you mentioned, real estate is one of the sectors to watch out for. But to your point about ag, let's take agriculture for example. Nigeria needs to go through an agro-industrialization process that includes mechanization. The challenge is the intervention model to date is stuck at intervening primarily with smallholder farmers because it links to our social investment imperative. But doing so, we have stayed at about 0.2 smallholder farmer per hectare. At that level, most of the smallholders remain unprofitable. Now, because they remain unprofitable, you create the working poor, actually. So there's a type of investment in agriculture that does not create more jobs, or when it creates jobs, it takes people into poverty. We call it low elasticity job creation. Currently, ag is structured like that. It creates opportunities for millions, but the millions it creates opportunities for, it doesn't really lift all of them above the poverty line. It just keeps them in the working poor segment for the most. To transform ag, you must have the value chains work, which means that our capacity to deliver seed, fertilizer, pesticides to prepared land for these smallholder farmers has to be dealt with as a set of economic opportunities. Currently, that's not the case. And to make it sustainable, it must be led by capital. Currently, it's led mostly by social investments and subsidized input sector. Now, because it's a subsidized input sector, it does not attract private capital in a significant way. And if you don't have private capital as the driving motivation for profit optimization, it doesn't really grow. Then, when you think of post-harvest, 65% of Nigeria's harvest is lost because of bad storage. Again, you look at an investment opportunity in warehouses and storage, but most investors that have invested in warehouses do not have a legal framework that protects that sector in a real way. Many countries around the world have moved to warehouse receipts, where the receipts are part of bankable collateral. We've been unable to get a warehouse receipt law passed in Nigeria in the last 10 years. So what we need to do in ag is similar to infrastructure. How do you make this a bankable opportunity that just allows private capital to come in? But to do so, you must remove the risks, right? So key investments are required. One is remove the risks on land. When will states be able to give investors 15,000 hectares of land and give them the title in 6 months or 3 months? It's taken 7 years, 6 years to get industrial agro land. And we're talking of scaling agriculture. When you want to scale agriculture, it's done on 50,000, 20,000 hectares of land. Most of us won't get that type of title in Nigeria or will spend many years trying to get it. So the first thing is remove the binding constraints. The first binding constraint is access to land itself. Then, of course, once you get that out of the way, there's security. And then there is just bad policy. So of all the cultivated land in Nigeria, at the beginning of this year, only 25% of smallholder farmers planted because they couldn't find cash to buy input, which came from the new Naira policy. And of course, we underproduce food. So of course, one of the drivers of food inflation we saw in June and July at harvest was low production because of low cultivation and low planting. So when you discuss these things, this is why the sequencing of policy, whether it's in ag or in manufacturing or in telecommunications, must be done by an economic team that agrees on the outcomes they want. Lastly is industrialized farming requires mechanization. Mechanization per hectare in Nigeria is 0.4 HP per hectare. You need about 4 HP per hectare to be a mechanized agricultural economy. So we are away from there. And when we are looking for how to attract investments into assembly plants, we're not attracting investors to bring tractors, right? We're attracting investors to bring more SUVs, and more luxury cars. So this is where the sequencing of policy has to match. It would be nice to see some assembly plants that are purely focused on mechanization for farming. The trucks, the harvesters, the plowers are coming in as part of an investment pipeline that goes into the ag land development, that goes into production, harvest, etc. So I think a lot of these things requires a systems approach to solve those problems.
Well, the thing was so good, I feel we should continue, but they just give us time. Our time is up. I want to thank you very much for being part of this. Thank you very much. Let's appreciate him as he steps down. Thank you very much, Dr. Adeluju. Thank you. Very quickly, we will move into our next presentation. Our next presentation will be coming from a man who is a successful C-suite leader, whose unique blend of business acumen, financial expertise, global market growth, and operational insight has earned him a reputation built of verifiable career achievements. He is the CEO of Nigeria Exchange Limited. I'd like to welcome here Mr. Temi Ukwola.
Good morning, distinguished ladies and gentlemen. I see the point that Carl was trying to make about the lights. It's quite bright. But let me please stand on all the protocols that have already been established this morning. And very quickly, maybe just start by first and foremost appreciating MTN, really for all that MTN continues to do. For example, today MTN, depending on what day you look at the markets, is either the second or the third largest listed company on the exchange today. This is under 4 or 5 years of being listed. MTN perhaps is one of the most diversified stock holdings that we have as far as just the retail breakdown and the broadness of the shareholding structure. Also, as we'll see during the presentation, a lot of the innovation that our market has recently witnessed has really been tied to MTN. And perhaps on a bit of a more personal note, the recently retired chairman of NGX, Mr. A.B. Mahmood, is also a strong stakeholder of the exchange, is a director here. So no surprises that when MTN calls, I jump out of bed and really I'm all ears. Welcome again this morning. And my job really is to speak for what is about 10 to 15 minutes about the Nigerian capital markets, essentially to what I plan to do is walk you through 3 broad areas. My view is that a lot of the people in the room, particularly for whom this event was themed, the foreign investors perhaps haven't really looked at Nigeria in very recent times for understandable reasons. So I hope that by the time that you are done, at least you get a good sense for the current state of the capital markets in Nigeria, and you can at least leave with some data as to what the current state of the markets in Nigeria is. Also to some of the asset classes that we have. Many people think it's just equities that we trade in Nigeria. I would look to address that. Of course, I'll speak to some of the challenges that we face. The challenges I think are very well known. I will not spend too much time on that, and I would look to talk primarily on solutions. Hopefully by the time I'm done, you'll get a sense for why I am personally excited about things that are currently happening in Nigeria, I think just like the previous speaker just spoke to. So talking about the current state of the markets, what I will do is just go through about 4 or 5 of the asset classes that we do business with in Nigeria. First and foremost, on the equity side of things, a few key data points, about $9 million, about $10 million, and a big chunk of that is by local investors, which I think is quite remarkable. Many of us always had fears. If you go back about 5 years ago during the markets, you would have thought and you would have found that at least 50-60% at some point of the trading on the exchange was by foreign investors. And there always had been this fear: what happens if these investors leave Nigeria? It's interesting to see that today foreign investor participation stands at about 10%. And what we found is that a lot of the institutional funds have stepped in, they've invested quite aggressively. You'd also see there on the left portion of this chart that year on year, that figure, at least in Naira terms, continues to grow. Market capitalization is just about $40 to $50 billion, again, depending on what exchange rates that you use. And you see there what the index performance has been in local currency terms. Of course, by the time you translate this into USD, you get a slightly different picture. But at least nonetheless, this is what the face of the equity side of our capital market looks like today. On the chart on the right, you would find that from a year-to-date perspective, Nigeria continues to outperform most major indices and most major benchmarks. I try to show here also on the equity side of things, it's important to realize that of this roughly $40-50 billion worth of market cap that I said the equity market is currently today, easily 15% of that market cap has just been added in the last 2 years or so. And so you'd understand why I was thanking AB just earlier. You've seen a lot of what I would call good quality listings on the exchange in the last 2 years. If you go back maybe 4 years then and you capture the MTN listing, which happened, I think, first listed by introduction in 2019, then very easily about 20% of today's current market capitalization is new on the exchange. Now, this point is important. It's important because there's a lot of talk, of course, rightly so, about delistings on our markets, and that is true. And in that sense, Nigeria is no different from most major exchanges. If you go to Johannesburg, for example, where I'm sure many of the investors here have flown in from, you would find that there's a very constant trend of delistings from the exchange. This is a trend that most exchanges are seeing. You're seeing capital reverse from public markets into private markets, particularly smaller companies. And so what most exchanges do is to make sure you're replacing those delistings faster than you're losing. So for example, on Nigeria, the other data point I think you can leave with is that the aggregate size of delistings we've had in the last 2-3 years is under 0.3 trillion naira, all right? And you compare that with what looks like about easily 5 trillion naira worth of new listings in the past couple of years. What has drove those listings? MTN I spoke about. Bua Foods was a very good listing for us. This happened last year, early last year. Geregu is another power listing also that occurred very recently on the exchange. It's the first generation power company listed on the exchange. This year we've had 3 outstanding listings. We've had VFD Group lists. We've had Mikio listing, which happened fairly recently. And a very interesting one is the one in the middle there at the top, is the Nigeria Infrastructure Debt Fund. This is a fund sponsored by one of our intermediaries, Chapel Hill Denham. And it's the first investment trust listed on our market. If you're familiar with those, if you're in London, for example, easily 1/3 of the listings in London are driven by investment trusts. And this, I think, as we'll see subsequently, I think will drive a lot of the growth on the exchange. Otherwise, on the left there is the historical performance of the all-share index. We are multi-year highs today, which I think is also quite remarkable, of course, also in local currency terms. So much for the equity market. On the debt side, you have here also a very quick snapshot of the state of the debt capital markets. Today, the outstanding market cap of debt instruments, of the debt stock, is just about the same size as the equity debt stock at about 39 trillion, which is again a $40-50 billion market cap. At the bottom right there is the turnover, which you see is about 100 times the turnover of the equity market, which I think is in line with global norms. But it's also been a remarkable, I would say, journey on the debt side also fairly recently. You see on the left side there, the year-on-year increase in government bond issuance is very strong, and the double digits. We've also seen very strong commercial paper issuances as well locally, and very strong corporate bond issuances. You see Dangote Cement issued a bond fairly recently, the largest single bond listing also in the face of capital markets. Away from that, three other asset classes here also that are traded relatively newly on our markets: ETFs, derivatives, and commodities. I've just tried to gather some data here from a few other exchanges, including our exchange at NGX. And some of the key takeaway here, at least first and foremost, is that there's a derivatives market in Nigeria now. We launched the index futures on the equity side. So the all-share index, we have a derivative or a future on that. We launched that last year. Today there is a bond futures also traded on another exchange in Nigeria. You would also be familiar with the OTC FX futures. The outstanding figure today is about $2.75 billion worth of those inflows into that market this year. And I think also that dispels some of the myth as to the fact that there actually is FX that flows still into Nigeria, which that captures. Finally, on this slide, on the commodity side, the bottom two figures there give you just a very rough sense. Very small figures, relatively speaking, but at least you're seeing increasingly the capital markets try to address the subject of commodities. How do you get more physical storage for commodities? How do you get them to sort of trade better? Now, let me move to the second part of this talk, as I said, which is the challenges that face the capital markets. Many of the things here we are familiar with, and we could spend the next 2-3 hours, as with anything Nigeria, to talk about the challenges and the problems. But very quickly, 4 of them are listed here. The first is, of course, liquidity. Many of you who sit here, who trade Nigeria currently or in the past, are familiar that a $10 million a day figure is quite low. There was a time in the history of our market that we traded $100 million daily. And so this remains, I would say, a big bottleneck for particularly many of the foreign investors who prefer, ideally would like a lot more flow as they bring capital and put capital to work. The second thing is, the investor base. The foreign investors, as I said earlier, have gone from about 50-60% to now 10% share of market. That is a bit concerning. And as we'll also see shortly, the retail segment of our market remains to be unlocked. The third thing here is the types of products on our exchange. Yes, as I mentioned earlier, there are quite a few things now that we've launched in the capital markets, but you would argue that the depth and the variety of these products also we could do with a bit more enhancing around. And then finally, regulatory and policy holdbacks. I would not spend too much time on that because I am regulated myself, so let's just keep through that very quickly. On to the more exciting stuff, where I talk about the opportunities that face the markets. And this is really what gets me very excited. I have here what I call a long list of about 8 opportunities, but I'll spend the rest of the talk on 3 of them. 3 that I think over the next couple of years or so, as we all plug into this renewed hope agenda, I really think would drive and deepen the capital markets in Nigeria quite remarkably. But before I get into the 3 of them, let me just touch on 1 or 2 ideas here that you can just take home with you. One of the ideas here is the Elite Network. That's the figure there at the far right of this. It's a product similar to what you have on the London Stock Exchange, where you argue that to drive small, companies and their listings on the exchange, you need to be very familiar very quickly with the fact that they need typically a segregated kind of rules. They need a bit more hand-holding. So think of this like an incubator of sorts for smaller companies, smaller size companies, where you can help them to reduce unit economics on things like their auditing, their governance, their legal type requirements, and you handhold them over a couple of years until they're ready for a listing. One other point there is around partnerships. How do we deepen partnerships? How do we form deeper partnerships? We're looking at partnerships today, for example, with DFIs, local DFIs. If you issue debts and bonds to companies in Nigeria, one of the arguments that we're making is that listed companies, of course, are more transparent, they're better governed. The odds of recovering your capital when they're listed is that much higher. So forming the right partnerships with some of these DFIs. And then the third point I'll speak on here before I then go to the other 3 ideas is technology. We've spoken about this quite a bit. One of the other things that has happened in our market in the last 2 years or so is the launch of a technology board. We've launched this board understanding that a lot of the technology capital raise that we are seeing is happening outside the capital markets. And why is that the case? It's frankly because the capital markets are not quite set up to capture them yet. And so this technology board that would also be looking to deepen over the course of the next few years is our attempt at addressing and driving that. All right, so 3 things that I would talk on that, as I said, over the next 12 months, 2 years, if we were to gather together again, what are the core 3 things that we're trying to track at the exchange that we really think can deepen the capital markets? The first of them, and dare I say the most critical, is what we've called advocacy. One of the things that you would find is that the capital markets that we have today are only what they are because of deliberate, conscious government policy. And we really couldn't stress this point enough. 1972, for those who are familiar locally, there was the indigenization decree. This was a decree, well, some people would argue it was the right thing, some people would argue it was the wrong thing, so that's not really what we're debating today, but it was a decree. And this decree essentially tried to get more local ownership and local participation from foreign companies. This singular act took by 10 times the number of listed corporates on the exchange. It went from about 8-9 companies to 82 companies in the space of a few years. And that's what led to many of the foreign national companies that you're trading on the exchange today. It was this decree and it was this act. Without that, many of the companies we have today will not be on the exchange. A second example of this is the financial sector reforms. In 2004, again, those who are familiar with the Nigerian capital markets understand what happened here. Increased capital requirements by the banks, by the regulator, drove many of them to the capital markets. Today, the financial sector and the banks represent 60% of the daily trading on the exchange today. But for a reform like this, the market will be materially different from what we have today. I speak here also about the pension reform, the Pension Act, a big government policy in 2004 that, of course, changed the face of the pension system in Nigeria. The big point to take away from this is that, but for an act like this, the depth that we have in our capital markets will not be there. I spoke earlier as to how pension funds today easily account for maybe 80% of the trading that we have on our local capital markets today because of some of these reforms. And then finally here, I speak about another big government advocacy and policy effort, which is the NCDMB. This was an attempt to try to add more local content into the oil and gas sector. Today, arguably one of the top 5, top 6 companies on the exchange is alive because of a policy like this. Seplat represents, for example, today, what was another big piece of innovation on our markets, a tie-up between Lagos and London. We saw a dual listing of a local indigenous company because of support of a policy like this. So the point I try to make here is that the singular biggest thing that can be done to change the face of the capital markets is not investment bankers wearing suits and knocking on the doors of companies for the next listing, or perhaps, all of these things that we do, but really intentionality around advocacy. At the bottom here, I list a few things that are food for thought that also will be keeping us busy at the exchange on this subject. The first one there is PCCL, and it's short form for a bill that in 2004 made it to second reading in Nigeria. That's the Private Companies Conversion and Listing Bill. Very, very, very contentious bill, I have to say, way before my time. But this was a bill that tried to argue that if a company in Nigeria operating at a certain scale, at a certain level of turnover, at a certain level of bottom line, then you should look to convert to a public company and list on the exchange. Imagine what a bill like that would do to the face of the exchange today as we have it. Quite material. Several other ideas here. We talk about a dual listing requirement. Today, you find this trend where many companies leave the shores of Nigeria to list abroad. That is good. We welcome that. However, when you go to many jurisdictions, one of the requirements that they add is that if you're listed abroad, you give local investors an opportunity to invest as well. Particularly when our pension funds, for example, typically only invest in local currency. A bill like that or an advocacy effort like that also has the potential to change the face of the capital markets quite materially. So many other ideas here. We talk about USD dividend payments. There's certain laws that we have that do not allow you, if you are earning dollars, to distribute those dollars to local investors in Nigeria. You have to convert that into Naira. It remains a disincentive for listing. But the examples are quite myriad. Imagine today if somebody said that to lift crude in Nigeria, we encourage you to be a listed company. And that's not a bad thing to do, because listed companies, as I said, are more transparent, they're better governed, and hold themselves to much higher standards. That would change things quite materially. So the first thing here is that advocacy is one key way to deepen our capital markets. A lot of work has been done on this. For those who are familiar with our markets, there is the CAMIC and the CMC that is sponsored and headlined by the apex regulator, the SEC. And what we'll be looking to do is to continue to help to deepen and to drive that further. The second of three, and this is what really, really excites me and what has really, I would say, attached us to MTN at the hip, is what I call digital transformation. And we've made quite a lot of progress on this. I should add that in 2021, November, we had the secondary share sale of MTN. And this is what I was speaking to earlier as the one singular thing that has changed the face of the capital markets. One of the things that hampers retail investing in our markets is the fact that retail investors can't meet the capital markets on this device just yet. Unlike the banks, a lot of the innovation and the depth you've seen in the financial markets is because on this phone right here, I can be connected into the financial markets in the space of minutes. The capital markets are different. The closest we ever got to in our market was during this MTN share sale, where in that primary offer, thanks to the support of MTN and some of their advisors, notably Chapel Hill, we were able to have investors invest in that offering, whether you were a new investor in Nigeria or whether you're an existing investor. In 2-3 minutes, you were able to invest. And some of the results we have here, 150,000 new retail investors, for example, a lot of those were women. And it really, as I said, changed what was the face of investing in our capital markets. So the big question is, how can we deepen this market from a sort of digital transformation perspective, because of some of the benefits here that I think are quite obvious? How do we take what we did on primary markets to something that's a bit deeper on the secondary market side of things? So that, for example, if, as we are here, we get information that by the time we're done in this meeting, someone says, I would really love to buy some MTN shares. Why should it take you 2 days or 3 days to get that sort of exposure that you would like to MTN? The way to address that and to solve that is through a digital transformation. I'll just pause for a few seconds to welcome His Royal Highness.
We would like to welcome His Highness Khalifa Muhammad Sanusi II, CON, the 14th Emir of Kano. Your Eminence, you're welcome.
Okay, thank you. Okay, thank you. So as I look to round this up, if there was anything I left you with, is to say that we are doing quite a bit to get the capital market onto a mobile device. One such initiative actually will be announcing this morning, which is the first ever use of USSD in our capital markets. It's a partnership and it's a brainchild of work we've done with MTN. If you have an MTN phone today, if you dial this short code 5474#, it just opens up a new gateway of capital market data and information for you, and we'll be looking to dip in a lot more of that. Finally, as to the three things that I spoke about, is what I call products. We're looking to launch in the next couple of years maximum, certainly any time from now, a few more key products that we think speak to what the retail investors are looking for. Today you have under 250,000 retail investors in Nigeria. As bad as that sounds like opportunity to me in a country of 200 million people. How do you get those people to the capital markets? It's through the digital transformation. And when you've opened up the markets through transformation, is to get the right sorts of products. Depository receipts. how can I, as a local investor in Nigeria, use Naira to gain exposure to securities abroad? Investment trust, I spoke to that earlier. How do we deepen and transform infrastructure, for example, in our country? It's through things like investment trust. And then, of course, digital securities, which I think is the language and is the norm that many of the retail investors are looking to consume today. So as I close, it's just really to leave you with this, to say that the markets, in my mind, are poised, I think, for a very significant transformation in line with the agenda of government that we see today. To do that, we continue to work on key partnerships, of which MTN, of course, remains a strong partner. And I think with your permission, before we take Q&A, I understand that there's a video to play for 30 seconds on this USSD launch that we are doing with MTN today.
Thank you very much. Let's appreciate him, ladies and gentlemen. Thank you. Okay. Let's. We have about 5 minutes to engage him, and he doesn't want to sit down. You know, he wants to do it like a soldier. So I'll probably yield the floor to the audience. If you have questions, raise your hand. How do you buy shares of MTN before the end of day today? So while we are waiting for those that will raise their hands, let me come to you very quickly. You talked about challenges, you talked about opportunities. What is the exchange doing about sustainability?
Thank you very much. Sustainability is a key topic for us. First and foremost, of course, because there's a lot of capital globally that is available for sustainability. So it's important that we make ourselves available and ready for such capital. On the secondary side of things, we launched green bonds in Nigeria on the capital market. So today, many of our corporates have issued and continue to issue green bonds. We have specific guidelines around that. Also, more importantly, one of the things that we're looking to do is to launch a sustainability framework. We're going to be working with many of our listed corporates to say that rather than talk about a net zero in Nigeria, which we think is too early a conversation, the ideal conversation should be around what is your current carbon footprint? Where are you trying to get that to? And then the exchange works with you around a framework to try to address that. We think that that forces better behavior from our listed corporates, and not just them, also a lot of the companies that are plugged to them in their ecosystem, in their supply chain. We're looking to launch a program that tends to hold everybody accountable for that. And then I'd say finally, back to partnerships. Today, the Luxembourg Stock Exchange is the most reputable exchange when it comes to sustainability. Before my time, there was a partnership that was signed and launched with them, which has been quite useful in positioning our markets properly, but we're looking to also leverage on that and to do a bit more of that.
Thank you very much. Do we have anybody in the audience?
Yeah.
Okay, please.
The name is Nana Au. And I want to thank Timmy for his presentation. However, I think that there are areas that you should be interested in. I'm happy you closed on the note of partnership and advocacy. First, CAC and NGX need to do much more in terms of the number of companies that can get listed. It is not sufficient for you to wait for a bill if the law says that if I am going to sell my shares in a company that is not listed, I need to have CAC's buy-in. I think what you should be doing with CAC is to say, if you are going to do this transaction, that transaction must come on an exchange. That way, our market will be deeper, because currently there is concentration risk, and then you talk about company leaving, delisting. I also think that in that regard, the minorities themselves need to be better protected, because if you don't protect them and they don't trust your platform, then you are not likely to have people bring money when the market will be needing money. The other aspect that I think that you haven't talked around and talk about has to do with cost. Yes, I know that cost of running government itself is a challenge, which the speaker before you probably didn't have opportunity to talk about. What is the cost of me having to be an investor on a Nigerian market vis-a-vis the other markets? So it's also important that you sit with your regulator. Governance is not first about collecting all the money. Government is first about providing platform. And once you provide the platform, then the money will flow in. But the manner in which we are going now is money first, and any other thing can go and wait. Let me close my remark and question on the issue that, again, the first speaker, probably because of time. For every business, just like marriage, there will be disputes. How long does it take a dispute on the market to get resolved? I've seen instances of over 10 years and the market still hasn't resolved them. Fortunately, because government came in, Owando will resolve in how many years? And that is not good for any market. And I'm sure that is not what you want to copy. Let's also hope that the issue of security, because each time we talk about government supporting the private sector, if I start a pharmaceutical firm today, I'm going to import largely over 60% of what I need, active ingredients. And we're talking about petrochemical, and emphasis on petrochemical is being much more on diesel and petrol. So in engaging government, let's also see how we can push that position so that all of us can be in a win-win situation. I want to thank MTN for this focus. Thank you very much.
All right, we have less than 40 seconds, but we'll take the second question and then we'll wrap up from there.
Okay, thank you. Barbara Barumbi, Imara Africa Consulting. I'd just like some clarification. Are foreigners allowed to invest in all listed companies and in MTN Nigeria in particular?
Thank you very much. Let me start with the second question because it's the easiest to answer. And the answer is yes. Foreigners are allowed to invest in all listed companies. And of course, as with any market, you need to do that with and through an intermediary, of which we have several in this room. But yes, you can invest in all listed securities, including MTN. Let me go to Mr. Awo's questions. Thank you, Mr. Awo. Of course, it's always good to hear from you, as I know you're quite passionate about the market, and thank you for all that you do for the market. I would speak more first to the cost of trading, because I take the other ones you mentioned more as takeaways. You talked about minorities and protecting them around delistings. This is a subject that's very, very top of mind for us. There's quite a bit that we've done around many of the delistings that we have heard about publicly, and in fact, if you look, you'd see that one or two that were announced all of a sudden look like they may reverse their decision. A lot of that is because of some of the work that we do, but I do agree that there's quite more protection that we need to give to them. Let me speak quickly to, of course, the demutualization of the exchange that has occurred. One of the things that drove the demutualization and the current structure that we have today is to actually just strengthen this regulation, which also is where the linkage with investor protection sits. And so for those who are not aware, today we have what I would call a world-class regulation business that's standalone, completely independent and arm's length from the rest of the exchange, really to make sure that governance, regulation, investor protection, and many of these things that they would coordinate with other sectors of our market are done. And I take your points as a takeaway to continue to deepen that. As to the cost of trading, I agree with you. I couldn't agree more. Because today, if you were to trade in Nigeria and trade out, let's assume you saw an opportunity and very quickly you want to do a buy and a sell, it would cost you about 2.something% to do that. That is very, very high on any metric and any standard that you look at that from. One of the things that we're trying to do, and I see that some of our intermediaries are here, so I want to be careful how I say this, but is really to force down a few of those costs. We find that a big part of them is the cost for brokerage. Technology will significantly help us to address that. If you look at many other markets, there are many digital platforms that allow you to trade for free at a zero cost. Today, there's still people that charge 130 basis points as brokerage to allow you to do business. We think that with a lot more technology and digital sort of transformation, that should be addressed. Of course, there are costs that we charge also as a business, as an exchange. In a world now where we're set up for profit, there's that tension. But I can tell you that a lot of our stakeholders are looking at this deeply to say, just as you said, should we take a bit of a longer-term view on this, relax some of those costs, and find a way to build the market if that helps. The other things that bring cost, of course, are things like even bringing deals and issuances to the market. A lot of the feedback we've gotten is that it's quite expensive to do that, especially when you compare it to raising money from a bank by way of a loan, for example. What I would just say is that some of these things can happen faster than others, but it's a subject matter that remains, I would say, front and center on our mind. The final thing that you mentioned, sir, was around CAC. How do we make it easier for people who want to exit? If these stocks are not necessarily listed on a public exchange like ours, can we work with CAC to just find a way to mandate that at least let that process be done on an exchange? I totally agree. We're looking to do that, not actually just with equity. There are many other parts of the Nigerian capital markets and perhaps even financial markets that if you look at today tend to happen OTC. And one of the things that we're trying to do is to work with the right regulators and agencies and say, look, let's try and push a bit more of those things. Not that they shouldn't happen, but that they should happen in a bit more transparent manner. This is how markets develop anyways in the first place. I think it's a good time to stop. Thank you very much.
The online people will be angry if you stop. But can you, in 1 minute, answer this? This person is talking about the downgrading of Nigeria from frontier to unclassified. So, what's your comment on that?
Okay, thank you very much. So I think this is another subject that, of course, gathered a lot of headlines, but then the reality and the impact is slightly more nuanced. Of course, for those who are not familiar, at the heart of it, when you say that Nigeria is in a frontier index, it means that Nigeria is one constituent of several other countries on an index that, in this case, is Morgan Stanley. So, for example, some of the foreign investors in this room might be what we call passive investors. Somebody might give them $100 million to manage and tell them to track the frontier index. So their job really is just to take that $100 million and invest it in this proportion. So of course, if your country is in that index, it's a positive and a benefit because then capital flows to you. So in this case, Nigeria was on this index, the frontier index, and we've just been removed from that index into what they've called a standalone index. So naturally, the first thing is that if capital was to flow into that index, Nigeria would not be at least a natural recipient of that capital. Or there's some people that would have been invested in that index, and because they're bound to be invested like the constituents of the index, then have to sell those constituents of Nigeria out, which also is not a positive. But in reality, like we had said before, the share of foreign investors in our market already is so small, 10%. In fact, in some instances, 5%, such that the real, call it short-term impact is not as the headlines would have suggested. A lot of that capital had flowed out already, naturally. Now, number two, I think what that also shows is the impact of what I call the macro on what we do in capital markets. You can't really disconnect the markets from what happens at the big picture, big level of things. We're very optimistic. If you look at a lot of the engagements that I think the government has been doing, that the exchange also has been doing, you would find that we've been quite active at trying to support the government's efforts, trying to get in front of investors at events like things like this that we're doing today. We're hoping that as the FX situation improves, because that was the material driver behind this downgrading and the removal, is that as you know, that changes. People who are familiar with capital markets knows that things happen cyclically. You go to countries across the world. Argentina is my favorite example. 1 minute, it looks like the world is over for Argentina because they've defaulted and the markets don't like them anymore. The next minute, another cycle shows up and they're the darling of investors. So I think what this really tells us is that we've got to just fix things locally. And once we do that, I think the capital flows back and many of these indices we get added back on as we've seen in the past. Thank you.
Thank you very much. Thank you very much. Let's appreciate him as he steps down. Thank you. Thank you very much. Let me one more time acknowledge the presence here of the directors of MTN. I'd like to welcome the chairman one more time, Dr. Enes Ndukwe OFR. Let me welcome His Highness Khalifa Muhammad Sanusi II, CON, the 14th Emir of Kano. Your Eminence, I welcome you. Mr. M.K. Ahmed, OON, Mr. Andrew Ali, Mr. A.B. Mahmoud SAN, OON, Mrs. Ifako Mogui Okaro, MFR, Mr. Raf Muputa, Ms. Sholo Mulifa. I welcome all of you, directors of MTN Nigeria, and I also acknowledge the statutory audit committee members. Norma Awo is the chairman, and Mrs. Josephine Ewitat is member. Your Excellencies, distinguished ladies and gentlemen, let me welcome here the governor of the Central Bank of Nigeria, Dr. Yemi Cardoso, represented here by the Director in charge of research at Central Bank of Nigeria, Dr. Omolara Duke.
Good morning, ladies and gentlemen. Sorry, the light is a bit too bright for my eyes. I'm here today representing the Governor, Central Bank of Nigeria. He is unable to attend because of exigencies of his duty. He has a speech which I'm going to read, and thereafter I'll take some of the questions slated for him. Standing on all existing protocols, good morning, everyone. It is my delight to participate at today's special event, the MTN Nigeria 2023 Capital Market Day, organized by MTN Nigeria under the theme, Executing for Sustainable Growth. First, I wish to congratulate MTN for being at the frontier of digital investment in Nigeria. Your organization is driven by strong businesses and investment strategies as reflected in your company's September 2023 unaudited account. The account showed that mobile line subscription for your clientele rose by 4.8% in the last 9 months with an addition of 2 million new subscribers, which increased your subscription base to 77.8 million. In the same period, your active data users increased by 13.3% to 43.1 million users, and your mobile wallet, person-to-person business wallet, also increased by 53.1% to 3.6 million wallets. Your business is a success story, an example of an exemplary foreign direct investment that contributed immensely to the digital space and commerce in general in Nigeria. The topic I'm speaking on today, driving investment through foreign exchange reforms, is of immense priority for the fiscal and monetary authorities in view of the importance of the momentum the current reforms are to diversify the Nigerian economy more than ever before, and also to improve sectors that are growth enhancing to drive inclusive and sustainable output growth. The current administration has affirmed its commitment to forge ahead with economic reforms and has demonstrated these far-reaching reforms, which was undertaken as soon as the administration was sworn in on May 29, 2023. This started with the elimination of the petroleum subsidy that had hitherto weighed seriously on government finances for years. Furthermore, the Honorable Minister of Finance, Budget and National Planning had approved the appointment of 3 designated banks for the collection of the Nigerian Export Supervision Scheme. In addition, there are ongoing processes to strengthen the synergy between the Nigerian Diaspora Commission to ensure the efficient transmission of remittances at lower costs. In view of the government goals to drive output growth and development, there are efforts to further improve coordination between the fiscal and monetary authorities to drive reforms across all sectors of the economy, including the foreign exchange market. Distinguished guests, notably the inflow of foreign capital into Nigeria declined significantly post-COVID-19 pandemic. Inflow of foreign direct investment declined from 438.7 million in Q4 2020 to 122.3 million in Q1 2023. Similarly, portfolio investment contracted from 476.53, a contraction, to a lower contraction of 2.2 billion in Q3 2023. In Q2 2023, however, there had been significant improvement in the inflow of FPI, which had risen to 1.9 billion on account of improved investors' confidence. Besides legacy issues, which include infrastructural deficits, bureaucracy, red tapes, security concern, and foreign exchange volatility, structural issues continue to sustain the inflow of investment. It is therefore imperative that we address these challenges, particularly the foreign exchange supply and volatility of our domestic currency, the Naira. Distinguished ladies and gentlemen, as the apex monetary authority, the central bank's mission is to ensure price and financial system stability as a catalyst for inclusive growth and sustainable economic development. To achieve this, the bank seeks to ensure the integrity of the financial system and the soundness of its policy that will engender economic growth, financial stability, and favorable external balance for investment to thrive. Among the tools to achieve this is a stable foreign exchange regime. Foreign exchange is an important price in Nigeria that has a high correlation with other prices. For this singular attribute, it is important that far-reaching reforms are undertaken to ensure market stability as a precursor for improving the investment climate in Nigeria. The recent reforms are to achieve transparent, stable, and a liquid foreign exchange market where the true value of the local currency, the Naira, is discovered based on demand and supply fundamentals. On June 14, 2023, a far-reaching reform in the foreign exchange market was the elimination of multiple exchange rate window and the transfer of all forex transactions to the Nigerian foreign exchange window. This window operates under the willing buyer and the willing seller principle to promote appropriate price discovery for the Naira and eliminate unwholesome practices. Due to FX scarcity, however, the exchange rate depreciated from June to October by 52.3%. The bank, the Central Bank of Nigeria, is however optimistic that as efforts to clear the matured FX futures and reforms continue, the Naira will recover and regain market stability. To enhance transparency and accountability in the foreign exchange market, on August 17, 2023, there was launched a new portal called the Foreign Exchange Price Verification System, which is a prerequisite for law importers to have access to foreign exchange. All applications for Form M are to include valid price verification generated from the price verification portal. This is to ensure all prices are quoted correctly and promote the reduction of spurious requests and support legitimate transactions. The CBN on October 12, 2023 lifted the ban on the 43 items that were hitherto restricted from accessing foreign exchange at the official window. This was aimed at improving orderliness and professional conduct in the foreign exchange market. By lifting this restriction, the Central Bank of Nigeria is reinforcing its policy of unified FX markets with flexible and transparent pricing. The CBN believes that as liquidity improves, the distortion in the market will moderate. Moreover, FX reforms had contributed to the decline in the demand pressure as we have seen in the market. Although the inflationary and foreign exchange pressure poses downside risk to investment and growth in Nigeria, there's optimism in the outlook of the economy as staff and IMF projection indicates an upward trajectory of output growth and moderation in inflation. The IMF projected an output growth of 2.9 and 3.1% for the Nigerian economy for 2023 and 2024 respectively, and inflation was projected at 25.1 and 23.0 for the same period. CBN staff estimates projects output growth for 2023 at 2.79 and 3.7 for year 2024. Inflation is also projected to decline to 23.1 into the first half of next year. Distinguished ladies and gentlemen, undoubtedly the Central Bank of Nigeria has a pivotal role in steering our nation towards a future marked with increased foreign investment. Driving investment through foreign exchange reforms is crucial for Nigeria's economic growth and stability. By ensuring exchange rate stability, we create a favorable investment climate and drive economic diversification, employment generation, and overall prosperity. The bank is committed to championing transparent policies, new technologies, and improve our collaboration with the fiscal authorities to ensure that we move this country forward. The Central Bank of Nigeria is also passionate about compliance with extant rules and regulation. Collectively, we must strive to create an environment that attracts foreign capital by increasing the visibility of Nigeria as an attractive investment destination. I wish you all fruitful deliberation and thank you for your attention. Thank you.
Thank you very much. Let's put our hands together one more time for Dr. Molara Duke. So we'll take our seat over there. You know, while you were presenting your address, I asked, why is the time allotted to you higher than the other people? And the answer I got was that your presentation is the meat of this event. And so, the floor is open for you to engage the Central Bank of Nigeria. I'm very sure a lot of our foreign investors want to hear from you. But let me take you up on this. IMF recently said the monetary policy in Nigeria is loose and does not support the Naira. Does the CBN agree?
Thank you very much. The Central Bank of Nigeria manages liquidity in a way to ensure that there is enough in the economy not to stifle it. I would say that the Central Bank of Nigeria had continued to pursue a contractionary monetary policy regime. Interest rate, that is the monetary policy rate, MPR, was increased from 11.5%. Currently, it stands at 18.75%. And we know, since this rate is that rate which other interest rate takes the anchor from, rates in the market, as we all know, lending rate, borrowing rate has also increased. So we will not say that we have a loose monetary policy, because at 18.75%, and then the rate at which bank give out loans, what we see is we are maintaining a contractionary monetary policy, but then with the injection from the fiscal side because of their expansionary monetary policy, then it may be seen as if maybe the tightness is not strong enough, but we are sustaining a contractionary monetary policy. Thank you.
So in essence, CBN disagrees?
Well, we are sustaining a contractionary monetary policy regime.
Anyway, the floor is open. You can answer any question. Do we have hands up? Okay, there are a lot of hands up there.
Thank you, Doctor. It's Janesh from Mazi Asset Management. There's a $6 or $7 billion backlog for FX. I think it was announced a couple of weeks ago. Is there a plan to clear that? Because I imagine the Naira will never find a stability if there's a massive seller trying to exit. So, is there a plan to clear that, and by when? Thank you.
Probably we'll take three, and then she can answer them. The second one, please. Maybe before they make up their minds, maybe might engage him on this.
Sorry, Madam, Mrs. Duke. First, our good wishes to the Governor of Central Bank. But fortunately for me, one-time Central Bank Governor is also here. What I find as a missing between the governor before you and the governors before now is there's no link between CBN, the way it's currently constituted, and the capital market. But realizing that the Nigerian capital market itself was a baby of central bank, will you be in a position to confirm that we'll be going back to the days where there's a lab, a connection, because the capital market and the money market certainly must have some level of connection. So is this something you want to confirm? But if you are not able to confirm, is this something that we hope to see in the future? Again, Nona Awo.
Okay, thank you. We have online questions coming in. This one is saying, what's the level of collaboration by the Central Bank of Nigeria with other financial regulatory authorities to ensure adequate liquidity in the system? Okay, so we'll take these three and then we can go back.
Okay. Thank you very much. The first question, which says, is the Central Bank of Nigeria clearing the FX backlog? Yes, the Central Bank of Nigeria has started to clear the FX backlog, and it is doing this in an orderly manner. And this is already in the media, even though it has not finished clearing it, but this is the promise of the governor of the central bank and the bank that will continue to put in all resources to ensure that we clear the backlog. It is a foremost issue, and we are very aware of the implication on the foreign exchange market for investors' confidence, and this is why it has commenced. So yes, the central bank is clearing the FX backlog. The second question asked if there was no link between the central bank and the capital market. Theory shows, and even in the literature, you cannot divorce a central bank from the capital market. The policies a central bank makes definitely affects the market, the capital market, particularly through the interest rate channel. For instance, if the central bank increases its monetary policy enough to ensure that the real interest rates are very positive, this is good news for the capital market because you now see a lot of inflow coming in. So through the exchange rate channel, the central bank is connected. The central bank as a regulator that uses its policy tools to manage the money supply. The interest rates that comes out of it will affect the capital markets, the money market, and then the bonds market. So there's a connection between the central bank and the capital market. And the last question is, what's the level of collaboration between the authorities? There are always one form of collaboration or not. There are different bodies under which central bank collaborates with different authorities. And this is very important for us to ensure that the monetary policy formulation affects the economy in a very positive way. So there's collaboration with other regulators, and then we are also making sure that our collaboration with the fiscal authority is very robust, because the fiscal policy and the monetary policy are both required to ensure that Nigeria achieve a sustainable economic development.
Thank you very much. We'll be back for another set of questions. Let's take our microphones round.
Sorry, hi there, Seki from Ashmore. Just to follow up, please, on the backlog. Could you let us know how you intend to fund paying that down? Second thing, possibly linked to last week, an announcement about possible deposit from the Saudi central bank into the CBN. Anything you can say about that, please, and any timeline will be helpful. And also, lastly, what is actually outstanding in the backlog right now, please? Thank you.
Okay, let's have more hands up. While that is on, we have other online questions from Madvendra Singh, HSBC. He says, how much FX backlog is yet to be cleared, and what is the most important factors or events which need to happen to stabilize the Naira rates? More hands? Okay, thank you.
Thanks, Janish from Mazi again. Is there a plan for the central bank to move to more conventional monetary policy? The last 6-7 years have been kind of chaotic. Excess CRR, debiting deposits, the regulations the banks have faced have been quite dramatic. Maybe just an idea of where monetary policy is expected to go from here.
Okay, maybe you can take this.
Thank you very much. I know the issue of backlog will engender a lot of interest, but as I said earlier, the central bank is in the process of clearing the backlog. The issue of where the funding will come from, there are several moves by the fiscal and the monetary authority to access external capital, and some of this will be used to clear the backlog. For the Saudi investments, I think this was an issue between the fiscal policy and the Saudi government. I really cannot say much on it now. And the next question is, what is outstanding in the backlog? All I can say is that the backlog is the process of being cleared, and the central bank will ensure that it does as much as it can to clear the what is left. But I cannot give you that this is exactly what it is, but you can take the word of the governor into consideration that he's going to ensure that the backlog is cleared, and the bank is really working assiduously to achieve this. The question is how much, okay, it's the same as the backlog. Then the foreign exchange market, the question was that what is the challenge with it? The challenge with the foreign exchange market basically is a foreign exchange shock, supply shock. And because there isn't as much supply to meet the demands, of course there's going to be demand pressure, and that's what we're experiencing, demand market pressure. But the institution of the willing buyer, willing seller has been able to dampen some of this shock. Hitherto, when importers or when exporters bring in their forex, there's some restriction on how they can sell it. But the market now is such that it's a willing buyer, willing seller principle. So people can sell to whoever they wish, and this is helping to moderate the foreign exchange demand pressure. The last question is asking if when central bank will return to the conventional monetary policy. Central bank has returned to its conventional monetary policy. Indeed, in the past, we undertook some measures, quasi-fiscal activities, but all those are in the past now. With the coming in of the new administration, they made it very clear that the primary mandate of the central bank is going to be price stability. That's what we're going to focus on. And this is what we are doing using the orthodox monetary policy tools, and we have jettisoned engaging ourselves in fiscal authority. So currently, our policy is to focus on monetary policy that is targeted as ensuring price stability. Thank you.
Thank you very much. More questions from the floor?
Hey, good morning. It's Randall from Old Mutual Investment Group. Thanks for the presentation and the opportunity to ask questions. I just wanted to ask if you can just confirm in terms of the CBN overdraft to government, what is the current status of that? I mean, are you still lending to the government through that facility? And then in terms of the recent issuance of OMOs, can we expect more of that? And just generally, what is the thinking around that? Thanks a lot.
Well, can you repeat your question, sir? She didn't get the last part of your question.
The OMOs, the open market operation bills that the CBN recently issued. So I just want to know if we can expect more of those and just generally the thinking around that. Thanks.
Thank you very much. More hands up. Okay.
Thank you very much. My name is Lynette Muriongi from Absa Bank, based in Kenya. My question is more on policy with a medium to long-term outlook. Cognizant of the difference between FX demand and supply dynamics at the corporate level vis-a-vis micro SMEs and retail space, is there an opportunity to incentivize the merchants to take up more international PDQ machines or POS machines to kind of tie the massive opportunity there is to build FX inflows from trade. And the reason why I ask this is because I can imagine the massive traffic, whether it's business or just general tourism, that is experienced by Nigeria. So if there's an opportunity for retail traders to make more money from, people in transit or tourism or business, such that the amount of FX inflows aside from flight, hotel, and maybe high-end restaurants increases to maybe 3-4x from 0.5x, just because we can use our international cards more at the merchant place. Is there an opportunity to incentivize them to take up more of those machines, just to kind of build FX inflow at the very last mile end? Thanks.
Thank you very much. Did you get that? Okay. Maybe we'll take one more for this round, and then I will come back to her. Okay. You can.
Thank you very much. The first question was on overdraft to government, what we refer to as ways and means. For the backlog, which was about 23 trillion, you should be aware that this has been securitized. And it is now like a loan to the federal government, and it's referred to as claims on government. This is to ensure that it does not dampen the balance sheet of the central bank. So this has been securitized. And going forward, the ways and means, if at all, it will be given to the government, it will not be more than 5% of the previous year's revenue allocation. The central bank is very, very strict on this, and the period where government easily access ways and means, that is over. For the OMO, that's open market operations. This is a liquidity management tool. It's one of the tools still used by the central bank, and it is deployed as we see it fit, not that we want to use it as an investment tool. It is basically a liquidity management tool, and there's a need to increase its use, then it will be. Then on the policy for FX supply and demand, if there's incentives to trade, the central bank is encouraging digitalization. We have seen that digitalization is the way to go, and if merchants have more access to FX using the POS, where people can deploy their debit and credit card, then it will be a very good means of accessing foreign exchange. So it is something the central bank can look into, even though we do not directly harbor on the merchants to use foreign POS for the cards. So the incentives there is we continue to strive to see all avenues for which we can improve the drive to increase foreign exchange flow into the economy. So if this is given a very good review, and we think it is appropriate for the country at this point in time, then it will be very well taken on board. Thank you very much.
We'll probably have more questions, but let me read these out from some of the online people. Is that what is your view of mobile money, and what type of support is offered by the Central Bank of Nigeria for their success? Why are the telecom operators not allowed to use their own brand for the mobile money services? More from the audience.
Sorry, Doctor, it's Janesh again. On the willing buyer, willing seller mechanism that's in place now, it doesn't look like it's the official rate we see on the screen is moving despite there being a willing buyer, willing seller policy. So, why has that the case? And is there maybe a aversion to allowing the Naira to really move properly? Thank you.
Did you get that? Okay, we have this question. Mayo was Samuel, Polaris Bank. I said, talking about inflation vis-a-vis the current MPR, for the past MPC meetings in the last 1 year, MPR has been at the upward trend, which has also impacted negatively on inflation. However, this seems to be on paper, and that is not the reality with the so-called market women, cost of production, labor, and consumption. What is really the CBN doing? Not just to increase MPR, but reduce or stabilize inflation below double digits. Okay, do you have one more? Yes, please.
So I just want to, I would like you, if you can please clarify what you meant when you talked about the CBN wanting to attract low-value remittances. I'm not sure if I had clarity around that. Thanks.
Okay, more hands are going up now. Will you want to answer these ones now? Yeah. Okay. After this set, we'll come back to you.
Thank you very much. The first question was, what is my view on mobile money and why telecos are not licensed to do so. Mobile money, as you know, this involves a whole gamut of money that are outside the fiscal space, money that you do not touch. Mobile money is very important because it also helps financial intermediation. It increases the velocity of money. With mobile money, transactions multiply. So mobile money is the way to go because this has to do with digital money, the use of wallets, etc. Now, I believe telecos have been licensed. We have, MTN has one which is called Momo Money. And everything in the country, however, has to be under a regulatory framework. Whether it's mobile money or physical money, we have to ensure we keep a tab on money supply. Money supply is that which we have to manage to ensure that inflation doesn't get out of hands. And with the emergence of mobile money, the velocity of money, the way at which money changes hands is very, very high. So mobile money is the way to go. However, we must also ensure that it does not start to breach the money supply benchmark. On the willing buyer, willing seller, I want to state categorically that the central bank has not intervened in the foreign exchange markets. If you have noticed well enough, the market is strictly driven by the people who have money to sell, the foreign exchange to sell, and those who have to buy. And the market is also in the process of price discovery currently. There are a lot of reforms that are going in. People are also ensuring that their position is not so loose that they may incur losses. So because of that, I believe that is why the rate is as it is. But central bank is not interfering in the market. We are not injecting. We are not buying. It is strictly for the willing buyer and the willing seller. So the rates you see is as determined by market fundamentals. There's no hand of the central bank in it. On NPR, I want us to note that this increase in inflation that we're experiencing in Nigeria is not just peculiar to Nigeria. This actually started from 2020 during the COVID-19 pandemic, when there was a lot of injection into the economies, both in the developed and the developing countries, to be able to overcome the impacts, economic impacts of COVID-19. However, these injections were so much that they pushed up money supply, which resulted in inflation. Now, people will say, even though the MPR had been is currently at 18.75, they cannot feel the inflation. Now, you also have to look at the counterfactual. What if the MPR had not been increased to that level? MPR is increased because we target monetary aggregates as our intermediate targets, which at the end of the day we intend to moderate inflationary prices. For most economies, it has taken a long while to come down. We believe, and from our forecast, the decline in inflation will start to be very obvious from the second half of next year. Besides the base effect, our forecasts show that inflation will start to drop. And by the end of 2024, we hope to see inflation in the lower double digits. The last question was on low value, low remittances. The question here is inflow of remittances into Nigeria. Nigeria is one of the top countries receiving remittances in sub-Saharan Africa. But the cost of inflow using traditional money transfer organizations such as Western Union, MoneyGram, is very high. The average inflow is about 12%, that's the charge on it. So we are looking at ways to which we can reduce this cost of transfer so that more people can come in through the formal channel. We have the e-Naira. There's now a policy where people can receive their money in Naira. You know that our diaspora have access to e-Naira. So if this transaction comes in through e-Naira, the cost is very low. So what the central bank is looking at, how to drive down the charges on remittances to increase the inflow, to move them away from the informal sector into the formal. So that is the objective of not low value, but low cost of transmission of services, of remittances into Nigeria. Thank you.
Thank you very much. I think we'll begin to wind down this segment. We want to say thank you to you, Dr. Omara Duke, for your insight into the operations of the Central Bank of Nigeria and our economy. Thank you very much for coming. Let's appreciate her as she steps down. And so, Your Excellencies, distinguished ladies and gentlemen, we'll just take about 3 Goodwill messages. And the first will be coming from the Acting Director, National Office for Technology Acquisition and Promotion, NOTAP, Dr. Mrs. Idorehin Imiyo.
Good afternoon, ladies and gentlemen. Standing on existing protocol. My name is Mrs. Ada Nladunke. My Acting Director General had to step out for another engagement, and I'm standing in for her to appreciate MTN for this opportunity granted us to be at this event, and for this event, which is very apt at this time in the Nigerian economy. Our role in what we do with MTN has facilitated, it always seeks to facilitate development of technology, acquisition of knowledge within the Nigerian economy. And we continue to partner with MTN and many other agencies in implementing what we do. I appreciate even the representative of the Governor of Central Bank of Nigeria for her comments has helped to reinforce the fact that we all work together to ensure that Nigerian economy will be better for us tomorrow. Thank you very much.
My name is Grace Unko. I am a graphics designer. I take pictures, I play the drums, I draw, and I started drawing a lot when I was younger. And I always wanted to go into something art related. Every single day I try to push harder and just being happy and at peace. I realized very young that I was different. I didn't really feel part of people, so to say. I traveled for surgeries in South Africa. Myself and my mom had to go to the mall. So she needed something and she sent me to talk to someone. And I randomly just tapped the man on his back and he shouted. Everybody turned towards my direction and I could feel myself about to cry.
I ran towards the room. I saw him at the end of the room.
He had crawled there and then the curtain was melting on him.
So I jumped, into the room that we were still smoking to pick him up. As I put my hand on his shin, his skin gave way.
Corporate organizations turned their backs on us. MTN came in at a point when I was at my lowest. This was in 2009. And then I got a call.
And it turned the story around.
They had found a hospital in South Africa. They had found a doctor. And before you knew it, we were on our way to South Africa. Till date, Grace has undergone 17 surgeries. And MTN has not turned their back on Grace since then. They've always wanted to know about his progress.
Being a fitness enthusiast, it has served as a form of therapy. I felt like if I got into it, could also boost my confidence and then stand out, not just by my bronze, but also looking good. Now that I'm graduating, I feel very excited to get into the real school of life, and I'm ready for the challenges life has to push towards me.
You call someone great, and then you expect that he has to go through something so that that name will be real, as his name is. For me, that's how his future is.
I'm bold, I'm confident, you can also do
it. I want to say a special thank you to MTN. Let's put our hands together for them, ladies and gentlemen. To them, it's not about profit alone, it's about actually touching lives. Thank you to the MTN Foundation. Very quickly, let me welcome here for the second Goodwill message, the House of Representatives Chairman on Capital Markets. I'd like to welcome Honorable Solomon Bob.
Good afternoon, ladies and gentlemen. I'd like to stand by the protocol already established, but I cannot fail to acknowledge the presence of my colleagues here from the Senate and House of Reps. We politicians, especially of Nigerian Hue, we are very particular and sensitive about protocol. So I welcome you all, and I bring you this Goodwill message from the House of Reps Committee on Capital Markets. We are pleased to witness what MTN do in Nigeria, and we are glad that this is happening, and we cannot we cannot underline enough the impact of forums such as this, how well we go into deepening and creating awareness about the markets, and basically spreading investor confidence. Just a few weeks ago, I was in Lagos at the invitation of West African Conference on Capital Markets, and they opened my eyes to a whole new vista of possibilities in the markets. Today, I've learned a few more things. Like I said in Lagos that time, capital market is not my forte, it's not my strong suit. Like I said Lagos some weeks ago, capital market is not my strong suit, it's not my forte, but our job is essentially compliance. We will do the best we can to ensure that investor monies are protected, and the laws regarding participation, stakeholders and players in the sector, are respected. There will be no sacred cows, no entity, however powerful, be allowed to engage in any breaches regarding capital market operations. So we send our Goodwill messages to MTN and thank them for this forum, and assure you all that the House Committee on Capital Markets, myself and my colleagues, do our utmost to ensure that we have an investor-friendly environment in Nigeria and deepen the market. Like I said just a while ago, it's not my forte, but our job is that of compliance. And my elements, when we're talking about the big issues, the hot button issues of politics and governance, those are the real drivers of change, and the real pivot of change in this country can come through only that area alone. But that does not understate the importance of economics and capital markets. So while here, I urge you all to take advantage of what's been said here, the opportunities that this forum can provide, and I wish you all a great time. Thank you.
Thank you very much. Your Excellencies, distinguished ladies and gentlemen, it's now time for me to welcome His Excellency, His Highness, Khalifa Muhammad Sanusi II, CEO and the 14th Emir of Kano. Your Eminence, please.
Thank you very much, and let me start by saying that I'm here in my capacity as a member of the Global Board of MTN, and as you can see, MTN has branded me yellow from top to bottom. And it's a great pleasure and honor to be here. And naturally, as you can imagine, I can't resist making a few comments on central bank and foreign exchange market because I've heard some of the questions. I mean, the first thing I think we all need to do is look at the immediate past, look at the present, and then look at what is likely to happen in the medium to long term. And also have, I'm personally optimistic, especially about the short term. And I think we need to understand the totality, have a full picture of the challenges that are faced by the central bank and how it's working to deal with them. We've had 8 years of a rapid expansion of the central bank's balance sheet through ways and means, and that has fueled inflation and weakened the currency, and that is a fact. Somebody mentioned conventional monetary policy. I don't know the definition of conventional. The central bank has always used a variety of tools. It's always used the CRR, it's used the OMO, it's also used liquidity ratio, and at any point in time, tightening has to look at a variety of issues. People want the central bank to just rely on OMO, but every time you go and increase your OMO interventions, that increases the cost of liquidity management and that hits the balance sheet of the central bank. When interest rates go up, it increases the cost of government borrowing, and when your debt-to-revenue ratio, debt service to revenue ratio is already at 100%, further increases in money market rates erode the government's balance sheet. So the central bank is at this point where it needs to mop up this money, but it needs to do it in a manner that minimizes the cost both to the central bank and to the government's balance sheet. And that's why it has to rely a little more on these non-conventional instruments. And I think we need to understand that. But it doesn't matter whether it's CRR or liquidity ratios. What is important is that the central bank recognizes that the excess money supply in the system needs to be mopped up in order to have stability in the currency. And I think what the central bank, if you look at OMO bills, if you look at OBB rates, if you look at T-bill rates in the last few weeks, for me, as an external observer, I can see that the central bank has started a process of aggressive tightening. OBB rates are beginning to approach what they should be, given where MPR is, and I think that is what the market needs to look at, that the central bank is taking this role of tightening money and fighting inflation as a primary focus. And the governor has said clearly that he wants to return to the central bank to its primary role of price stability. This is, I think, important. Now, you and I understand that this is not like switching off a light or switching it on. You can't, in 2 weeks or 3 weeks, undo what has been done over 8 years. That is the reality. But the central bank paid in, I think, $400 million to begin to pay back past dues. Obviously, it will not start without having some liquidity and some firepower to pay it off. The numbers that are being quoted are a bit exaggerated because you must remember the central bank will also look at all the documentation behind those claims. Not all those claims are backed by proper documentation, and I'm sure the central bank will not pay off claims unless they are convinced that the forex was used to actually import goods. Okay, so if your claims are genuine, if the documentation is correct, I think the fact that the CBN has started paying back means that it's good to continue paying back. And I want to please remind everyone, I am not the governor of the central bank. I am reading, okay? So I'm not making a policy statement, okay? However, I can read from what the central bank has started doing that this is the direction in which it is going. Now, a lot of this is public information. The finance minister has said he expects $7 to $10 billion before the end of the year. We have heard about the discussions with the Saudi Reserve Bank, and I don't know how quickly that will be. But frankly, even $7 billion is more than enough to clear all the backlog. And that's good news. If you get that before the end of the year, you can be sure that the backlog is cleared before the end of the year. So for the short term, I don't think we have a problem. I think the central bank is doing the right things, tightening money, clearing the backlog, trying to fund the market, and I think we'll have stability. What we have to start talking about now is beyond the next 12 months, because at the end of the day, you've got to look at the structural issue of the NMPC not bringing in enough dollars to the central bank. That has to be looked at. And that is coming from 3 sources. One is the massive oil theft that is happening at the point of production, which means the government has to work on security and make sure that we do not lose all the crude that we're producing and we benefit from our production. The second is the lack of investment in onshore fields, many of which are mature fields, 7 decades already. The IOCs have exited them. We need those who have taken over to invest because we get a bigger share of forex revenue on onshore fields than the deep offshore fields because of the production sharing contracts. Okay, so beyond stabilizing the market, we also need to look at all the other steps that are taken. And the third is what the government has started on conversion to CNG, because when you move to alternate energy and reduce your dependence on PMS by relying on your gas, which you are currently burning, you are able to reduce your forex expenses, you're able to reduce your spending on energy, you're able to reduce your fossil oil emissions, and that's good for climate change. And LNG makes money from propane that's currently burning away because there is no market. Nigeria is potentially a huge CNG market for vehicles. We have 12 million vehicles. If you convert just 1 million, you save $2 to $3 billion in PMS imports. And that has a huge impact also on inflation because of the cost of transportation. So my view, and I have not been as optimistic as this in a long time, is that given what the central bank, the current central bank is doing, I think we should take from this a very positive outlook for this country from as early as the end of this year. Now, then we've got to all put our heads together and see how, after stabilizing, it's like a patient who's hemorrhaging. You've got to stop the hemorrhage first, and then you go through a process of recovery. So I think the central bank is taking this system to safe harbor by bringing in stability, and then the real work begins, which is the structural change that we have to make to ensure that this does not happen in another 18 months, another 24 months. So this is my reading, and I'm only saying that because someone asking a question said something about a former central bank governor being here. And frankly, I only speak macro because it's the only thing I know. I don't know, I'm not an IT expert, and I'm not, even though I'm on the board of MTN, so I try to restrict myself to the economy and macro, but I'm on the board of MTN, and my experience on that board is that this is a board that lives with the highest standards of governance, and it's something that has been a learning experience for me, and it's a company I'm personally proud to be associated with, and I'm happy you're all here. So wearing the MTN hat, I thank you for your support, and I wish you successful deliberations.
Thank you, sir. Thank you for those thoughts of optimism, reassuring us that there are better days ahead. Thank you, Your Highness. Let me just announce to you that tonight, the Capital Market Day will also have a dinner at the This Day Dome, very close to the Federal Secretariat, not far from here. There'll be a dinner with regards to this event right there between starting from 6:30 or probably 7 really, but let's say 6:30 for 7. The event dinner at This Day Dome, 6:30 or 7 tonight. Let me also say, because we've been receiving inquiries online with regards to all the papers presented, from the paper presented by the CEO designate of NSG to Mr. Temi Popola and the central bank woman, there's an assurance that all of those papers have been uploaded on the CMD, or that is the event website, www.mtn.ng/CMD. And I'm very sure, especially for our online participants, in no time you have access to all of those papers. But again, let me remind you that the dinner tonight between 6:30 and whatever it ends will be at the This Day Dome, very close to the Federal Secretariat. So finally, our final goodwill message will be coming from distinguished Senator Ikra Aliu Bilbis, who is represented here by Mr. Victor Effiong, a director at the National Assembly.
Good afternoon, ladies and gentlemen. I stand on the existing protocol. I bring warm greetings from Senator Ikra Aliu Bilbis, the chairman of Senate Committee on Communication. He sent his apologies. He would have loved to be here personally, but due to
legislative exigencies. Since Honorable Bob, the Chairman, House Committee on Capital Market has spoken, National Assembly being a bicameral legislature, I concur with all what he has said. Looking at the theme of this event, which is executing for sustainable growth, is very, very apt, considering the state of our economy. There is need for sustainability in everything we do, even as humans. That means there must be consistency in growth. Growth without sustainability is no growth at all. Since this event is to provide financial stakeholders the opportunity to meet with management of MTN Nigeria, to get more information on the company in general, and encourage investors to invest in the company, this event is a step in the right direction to sustain the growth. On behalf of the chairman and of the Senate Committee on Communication, I wish MTN Nigeria well. Thank you for your attention.
Thank you very much. Thank you. Before we break for lunch, we will take a set of photographs. And the first photograph will involve Mr. Ralph Mupita, the chairman of MTN NS Ndukwe OFR, acting director, Office of Technology and Acquisition and Promotion, and then the managing director of MTN, Mr. Carl Toriola, Sholofelo Mulefe, and His Highness, the 14th Emir of Kano, right here on stage. Right here on stage. The MD is already coming to lead the way. Mr. Ralph Muputa, the chairman, the acting director of NOTAP, the CEO of MTN, Mr. Sholofelo Mulefe, His Highness. If Mr. Temi Popola is still in the room, please join us now. Temi Popola. Okay, Nigerian directors, please. Nigerian directors. So Nigerian board members, okay, the board members can leave us. Let me welcome Company Secretary. Okay, members of the National Assembly that are here. Mr. Ralph Maputa, please remain. Members of the National Assembly that are here. Okay, one more. They want Mr. Temi Kukwala to come back and the Chief Digital Officer of the Nigeria Exchange. Huh? Okay, ESCO should just be on standby. Tell me, please, and the digital officer. Okay, ESCO, please join us. MTN Nigeria ESCO. MTN Nigeria ESCO, please. ESCO. Please don't forget, dinner tonight. Okay, they're inviting MTN members of the Statutory Audit Committee to join. Statutory Audit Committee to join. Statutory Audit Committee. Thank you very much. We still have one more session on the sustainability of the capital markets. That will be after lunch. But don't forget that 6:30 this evening, we have dinner at the This Day Dome, 6:30. This Day Dome is very close to the Federal Secretariat, not far from here. But now this is how lunch will go. Everyone who is seated on the sofa will go through the door to my left. Lucky, get the ushers to direct them. The rest of us will go through the back to the venue of our lunch. Everybody who's seated on the sofa will go through the left here. They will direct you. The rest of us, please go through the back to the venue of our lunch. And lunch is for 57 minutes.
Oh, I wish you were here.
I'm always with you.
But it's not the same without you.
MTN 5G's amazing technology will change how we experience life and the internet. Get ready to encounter the incredible, and remember, no be juju, na MTN 5G.
My guy, my brother, my blood. You no get wetin fall from sky, wey ground no fit collect. You know now, we have been through a lot. And we're still standing strong, nothing the happen. You don't forget, together we overcame monsters. Found our own way through the dark with our own light. Never stayed on our knees when the world brought us down. And when hunger tigele, we found a way through the tough times. Battled the darkness with hope. And survived the heartbreak of loss. You see, all these things have made us unbreakable, unstoppable. So guy, shake off that bad vibe. Face that challenge with your full chest. Because this life, now we go run out together. Nothing do you.
I remember then, when they asked me, oh, what do you want to do in the future? I always say I want to be a newscaster.
There are a lot of times I've told Trust that I don't believe he can't see.
Trust is always ready to do something extra. He's always coming out to say, can I do a bit more? My mind was, where with this talk? How can I begin with a blind child from this age? How will I cope? He will always come to me, Mommy, I know I can't see, but don't bother me.
My wife now said, let him just go to village and relax. As they were going, he had accident. And the one that just was following, I lost the boy in the accident. When the scholarship came, it's as if we put water on a dry pot. That's how our joy was bubbling. If not, I don't know whether Trust could have graduated with his on his. Life is a journey. You have to make that journey work.
Welcome, ladies and gentlemen, and thank you for joining us today. We appreciate your attention as we go through a few health and safety guidelines. For your well-being and comfort, please note there is no smoking in this hall. For your convenience, the restrooms are on the left of the hall. Please follow the directional signs or ask any of the hostesses. This hall is equipped with 2 exits. The entrance to the lobby also serves as an exit, which leads to the muster point beside the car park. In your likely event of a fire, please do not panic. Evacuate the hall using the nearest exit. Get to the muster point and wait for further instructions. Do not take risks or return to the hall for any reason until authorized to do so. Emergency medical support is in place and our hostesses are on hand to assist as needed. Watch out for trip hazards and please be safety conscious while you move around. If you have any questions, please do not hesitate to ask any of our hostesses and report any incident to the MTN control room at 0803-200-1832. thank you for your time and attention. Do have a lovely day.
Nigeria, a nation bustling with potential, where opportunity and innovation converge. And it gives us great pride to be a part of this dynamic narrative. Working with our partners and other stakeholders, we've spearheaded Nigeria's digital evolution, pioneering from 3G and 4G to proudly being the first to introduce a 5G network in Nigeria. Our 5G network spans all 6 geopolitical zones, with over 800 active sites offering unparalleled connectivity to millions, sparking growth and shaping futures. Our commitment to connectivity doesn't stop there. We've extended our broadband services to over 89.6% of the population, fueling innovation and fostering digital inclusivity. We've also partnered with governments and organizations to extend telecommunications coverage to millions of Nigerians living in underserved and unserved communities nationwide through our rural telephony program. In the dynamic fintech space, our user base is 14.9 million strong and growing, with 3.6 million active wallets served by an expansive network of over 229,000 Momo agents and 197,000 merchants. Working with partners that share our vision for a sustainable future, we've initiated Project Zero, employing the latest eco-friendly technologies to reach our ambitious net zero target. As a responsible corporate citizen, we've contributed over 4.7 trillion naira in taxes, earning recognition from the Federal Inland Revenue Service as one of Nigeria's most compliant taxpayers. Our investments go beyond technology. Through the MTN Foundation, and in collaboration with local communities and public and private institutions, we have invested over 26.4 billion naira into national priorities in health and education, empowering youth, uplifting communities, and supporting national development goals. This is MTN Nigeria, a story of innovation, shared value, and progress.
Ladies and gentlemen, mic check 1, 2. 1, 2, 3. Sound check 1, 2. We are checking the mic. Testing, testing. Testing, mic test, mic test. Good day, ladies and gentlemen. Mic check 1, 2. Sound check. Checking the mic. 1, 2, 3. Testing, testing. Testing, testing. Microphone. 1, 2, 3. Good day, ladies and gentlemen. Mic check. 1, 2. 1, 2. 1, 2. Sound check. 1, 2. 2. 2, 1, 2. Microphone check. Sound check. 2, 1, 2. Ladies and gentlemen, we are testing the mic. Checking, mic check. Sound check. 1, 2. 1, 2, 3.
Please, on that light, let me see. Oh, sorry. Please turn this off.
Hello, my name is John Paul Martins. Come to his wisdom. Who am I talking to? Mark. Who am I talking to? All right. Didi. Hello, Didi. Are you live? Hello, Dr. Didi. Are you online? Can you hear us as well? She said she can hear us. Okay, thank you. We just wanted to confirm, connectivity. You're on break right now, so immediately we come back from break, you are on. Engineer suggests you move closer to your laptop if you are using the laptop microphone, so that you can be more audible. It's better now. It says it's better now. And you have your presentation standby as well. Okay, project a slide, let's see.
Okay, you kind of disappeared now. Second. Just, there seems to be a bit of an issue here now. Okay, let me see. My system has suddenly really slowed down. I'm not sure why. Can you still hear me? Can you still hear me? Okay. Are you still there? Can you still hear me?
Yes. Can you hear me, sir?
Okay. I can hear you now again.
Okay. Okay.
But my system is suddenly very slow. Not sure why.
Do you want to shut down and restart it? Do you want to quickly restart your system?
Perhaps, but let's try this first. Can you see the slides I'm projecting?
Not yet.
It's projecting on my side. Okay, maybe the shutdown is a good idea.
Yes, we can see.
Can you see them now?
Yes, we can see your screen now. Yes, we can see it
but
now.
it still seems very. And is it changing slides?
Yes. You're in slide 2
So now you can see overview.
Yes, slide 2, yes.
Can you see structure now?
Yes.
Okay, so maybe I need to. So it's generally moving. So
Yes.
you're seeing why ISSB suits Africa now.
Yes, I am.
Okay. Okay, so stop presenting.
Okay, just put everything on standby.
Yeah, it just seems very slow on my side. Let me just shut a few things down on my system while we're waiting.
Okay.
Sorry.
You're welcome. You're welcome back from lunch. Please, let's come in and take our seats. Let's come in and take our seats, please. Please come in. Please come in and take your seats. As we're coming in, let's settle down, take our seats. Please come in. Please, let's come in and settle down, please. Please, let's come in and take our seats, please.
Ladies and gentlemen, the event is about to start. Can you please come in and take your seats, please? I'm going to walk to the back and corral everyone to their seats now. Sorry? MTN execs move to the front. The government dignitaries have left. Linda, you are pretending like you don't know his way. Ogonwa, cut soup. I'm going back to commerce.
Please, let's come in and take our seats, please.
One of the reasons why I started in Mira, I wanted to make people feel good about what they were. I lost my dad in 2008.
The day when the man died, I don't want to remember. School fees come, the adults Things you no God do for me too.
My journey with MTN started in 2014. I remember the night I told my mom I'd gotten a scholarship. It was midnight. I went to the room, I woke her up and I said, I've gotten a scholarship.
Oh, happy. Neighbor week.
The tagline for the YEDP program was "Turn It Up." The funding has helped me turn my dream on. My ambition is to be successful, impact lives, and generally just make people happy.
So, we are starting now. Thank you very much. But let me recognize and welcome here the Registrar and Chief Executive of the Chartered Institute of Stockbrokers, Mr. Josiah Akerewutsi, who is here with us. I welcome you. Thank you very much. You're welcome. This session will be taking a look at sustainability and the capital market. The way it will run, we will have a presentation from Dr. Ndidi Noli-Edozie, Board Member, International Sustainability Standards Board, and then we will have our panel that will discuss a few issues around sustainability. Oh, here she is. Dr. Ndidi Noli-Edozie holds a BSc Economics in International Relations from the London School of Economics and Political Science and a PhD in Sustainability and Governance. She is an alumnus of the Wharton Business School and attended executive programs at INSEAD and George Business Schools, Cambridge. She has published books, serves on several non-profit and social enterprise boards, and have made it her life mission to support Africa's sustainability development. Dr. Ndidi, are you online now?
Yes, can you hear me?
Yes, I can hear you. You're welcome. Good afternoon to you.
Good afternoon.
All right, you're welcome.
Good afternoon.
So you can deliver your paper, and then you will also be part of the panel later.
Thank you very much. It's a great pleasure to be here. I regret that I'm not there in person. I also can't see the room, so I'm kind of speaking to myself, which is always very odd. I have a few slides. They're more extensive than they need to be because I know they'll be distributed afterwards, and so I hope that they will be useful. And I will project them now. It's very difficult always to come after lunch and also after the esteemed speakers that spoke beforehand, and I will do my very best to provide an overview. Specifically, what I'll be speaking about today is sustainability standards that are for capital markets, and specifically referencing the IFRS, which you know from accounting standards, and the global baseline and sustainability that it's developing, specifically regarding risks and opportunities. I'll walk through 6 different sections, and I'll end up with Nigeria specifically, starting first of all just with an overview as to why the ISSB was established. And it was established as a result of broad market support, large entities, including like the Financial Stability Board, but also G20, G7, and IOSCO, which has endorsed the standards. The objective is really to provide decision-useful comparable information, reduce the alphabet soup of voluntary initiatives, and enable an efficient reporting landscape for sustainability disclosures. Just in terms of the structure of how the ISSB operates, we operate under the IFRS Foundation. So the ISSB, which is the Sustainability Standards Board, sits alongside the International Accounting Board. And the objective is really to ensure that there are sustainability-related disclosures that sit alongside the financial statements. So that one of the key indicators, and I won't get into the technical details today, is that really in about 2 years' time, when you're picking up your financial statements, you're picking up at the same time your sustainability-related disclosures in tandem with the financial statements. The way that this works is really that your financial statements have a wraparound regarding sustainability-related financial disclosures, specifically risks and opportunities that are climate-related, but also overall sustainability-related. Interoperability is a very key feature so that the frameworks and the standards and the guidelines are used to so far work in tandem. Just to give you an overview of what first two standards are of IFRS. The first one is the general requirements for disclosure of sustainability-related requirements, and that really deals with material information that is sustainability-related risks, building on the TCFD architecture. So governance is very important, ownership by the board, strategy, and then of course risks and opportunities, and also targets and metrics. The second standard is the climate-related standard, which deals with material information on climate-related risks and opportunities, and specifically also looks at industry-specific disclosures. I'll show a few statistics later on to explain why this is so important. But very importantly, the standards are written so that really a company is looking at the strategy that it has, its transition planning, and re-evaluating its business model and operations, as well as its value chain, to ensure that the climate-related risks and the opportunities that they have on the company's performance and prospects are taken into cognizance. This is very important, especially for capital markets. So why the ISSB standards? First of all, because one of the reasons why, and we'll see that later, African companies and Nigerian companies in particular are sometimes rated down by rating agencies, especially those who take ESG risk into cognizance, is because there's not enough data and there's not enough internationally comparable data to support capital flows. And this is one of the key issues that the ISSB seeks to address. In cost-effective and decision-useful data for capital markets and investors in particular. So in that regard, because the IFRS Foundation's accounting standards are used in 140 different countries, the idea behind IOSCO's endorsement of these standards, which the Nigerian SEC is a member of, is that we create a global baseline that can be used across 130 IOSCO jurisdictions. If we look at climate data, for example, recently on the Global Climate Risk Index 2021, you can see that 10 of the countries most affected by extreme weather are in Africa. In fact, this figure has actually increased to 12. And so it's actually very important that even though Africa contributes the least to emissions, it's actually the most affected by these emissions. And there's also a secondary effect on supply chain and jobs. So one of the interesting statistics is that the African supply chain finance market rose by 40% between 2021 and 2022. The ISSB disclosures require Scope 3 emissions to be disclosed, which means that entities will start to look at their supply chains and their value chains as part of the evaluation of where the climate-related risks are. And this is something that's going to be increasingly material to investors and capital markets globally. So it's definitely something that we need to take into cognizance. The second graph here really just speaks to the fact that a lot of the jobs that we have, obviously largely in government and social services, but also industries, agriculture, retail, hospitality, transport and communication, you can see is also quite highly limited. What I thought was also very interesting is that what we sometimes forget is that remittances are actually the fastest growing flows into the continent. That's something to bear in mind because that's part of what can actually enhance our capital markets. But even in terms of foreign direct investment, we are expected to surpass Asia and the Latin American countries in the next 20 years, as the graphs here show. So there is significant financial inflow already, but that can be significantly enhanced. What this graph also speaks to is the fact that actually, whereas a country like the United States has 70% of institutional investors, other countries, and unfortunately Africa is under others in this OECD graph, we have 55% public sector investment and approximately 5% come from institutional investors. So in other words, there's a lot of scope for expanding and deepening our capital markets and attracting these capital flows from institutional investors, and data is going to be very critical in that regard. In terms of the criteria that they use, ESG integration is a big one. Negative screening, which is also where we get screened out a lot, is significant to take into cognizance. What I wanted to say here is that really data is absolutely important, and that's one of the things that the ISSB tries to highlight. Again, here we can see that where the lower ESG scores are, you can see that the market capitalization of those companies is significantly lower than the high ESG scored companies. Likewise, also return on equity and return on assets is significantly higher with the ESG scored companies. In other words, it's a business case for considering climate-related and sustainability-related risks. One of the big risks in terms of emerging markets challenges is robust data. Obviously, there may be more, but also lower rankings and scores by rating agencies. This is what I wanted to highlight, which is part of what the sustainability-related disclosures address, specifically also because the IAASB, which is the global entity on assurance and audit, is looking at the ISSB standards, as well as, of course, the GRI standards. But ISSB is about a year old, and it's a major consideration for the International Accounting and Audit Standards Board. And this helps us address that question of high risk perception ranking by rating agencies, which is largely due to poor data and poor reporting. Likewise, what the ISSB standards are trying to address is really addressing the indirect and poor linkage presently between sustainability disclosures and capital flows. It's our conviction that actually that can be significantly addressed and therefore really unlock capital flows to the continent. Big question, will Africa leapfrog? Now, one of my favorite past jobs was actually working as the Director of Strategy and Monitoring at the Nigerian Communications Commission in the early 2000s. And we know how the telecommunications sector leapfrogged in that regard. Likewise, also technology can be used as a major proponent to leapfrog also in the space of sustainability-related disclosures. And this started at COP27. Nigeria was the first country to raise its hand at COP27 to indicate that it will be implementing the sustainability standards in Nigeria. And the Financial Reporting Council of Nigeria and the SEC, who are on the panel, are the key drivers of that initiative on the Nigerian continent. And together with NGX, who's also on the panel, they have been among the larger voices to indicate that the standards require proportionality. That is, that they should be used also for smaller entities and especially applicable for African markets and emerging economies. So what's very important here is Nigeria already has leapfrogged in terms of leading, and followed by Nigeria were Ghana, Kenya, and Zimbabwe, who followed suit essentially and are among the first countries to adopt the ISSB standards. And this has broken a record and continues to be spoken about very highly. Likewise, also digital reporting, just talking about leveraging technology, also helps to provide access to data, which is critical for investors to consume the sustainability-related financial information digitally, but regulators, in other words, to enhance the digital reporting and accessibility of information, and for preparers to reduce the cost and burden of reporting. Nigeria, Ghana, Kenya, and Zimbabwe, in fact, next week, will be participating in a Pan-African overview of the digital taxonomies, and also Nigeria specifically leading in terms of the roadmaps. Again, congratulations there to MTN, which is a member of the Adoption Readiness Working Group, and actually was the first to raise their hand during the launch in Nigeria of the ISSB standards to say that they will be early adopting these standards and leading the way for the African continent. Why are the standards so important, and what does it mean to have the accounting standards and the sustainability disclosure side by side? Because then climate-related risks and opportunities are built into the financial statements so that one can see future cash flows and prospects of, I'm just seeing that my battery is low, future cash flows in terms of, one second, apologies. Future cash flows regarding apologies. Future cash flows and prospects of businesses that are related to sustainability-related disclosures. So this is an idea of how the tagging helps to make information much more accessible to ensure that investors can actually access the relevant information, not just with the financial statements, but also the sustainability-related disclosures. And in terms of shaping how this taxonomy looks, Africa contributed 14% of the comment letters, which is really a game changer, and has resulted in the main message being that we want to start simple on that taxonomy to make sure that especially those countries where digital reporting is not currently implemented have a good advantage of emerging ahead. And this significantly helps in terms of investors being able to access information, companies being able to cost-effectively report on disclosures, and also generally improving regulatory oversight. In the Nigerian context, what we've seen over the last 10 years is we started with the launch of the Nigerian Sustainable Banking Principles in 2012, but you'll see that from 2022 till now, FRCN announced first that Nigeria will adopt standards. The Adoption Readiness Working Group was created first in Nigeria with leading companies on the exchange, including MTN, Dangote, and others, included in a Readiness Working Group, essentially shaping the local environment. NGX and FRCN launched the standards in Lagos concurrently with 7 jurisdictions across the world. As a result, Nigeria is part of the Transition Implementation Group, MTN actually specifically, but also Dangote, in terms of shaping feedback to the ISSB on what is working and what is not working. Likewise, also Nigeria is included in the taxonomy consultative group that is working with IFRS Foundation in order to shape how the digital reporting landscape looks. This is an overview of the composition, and you can see that there are 2 strong African companies right on the table helping to shape these, and also various other kinds of feedback that can be taken. In terms of 4-pillar strategies to support adoption, proportionality is absolutely key. That is making sure that the standards work for smaller companies as well as larger companies. Adoption guidance, transitional reliefs which can be decided upon locally within the different jurisdictions, and of course additional capacity building, which is absolutely key. So it's a huge opportunity actually to build the capacity, leverage what the ISSB has and is making available in terms of capacity building, and work on the Ministry of Finance of Nigeria is actually one of the 30+ global and local partners in the partnership framework, ensuring that the specific circumstances of emerging and developing economies and smaller companies are taken in cognizance. And my closing words, just because we said that this would be 10 minutes long, what I wanted to say was that, globally, the climate finance that is transmitted across the world, Africa only attracts about 3% of that global climate finance, even though it emits less than 4% of the world's global emissions. So that's a huge gap. It's a good and huge opportunity to actually take advantage of better disclosures and awareness in the financial statements to ensure that as a result of better data, more robust data, and better sustainability-related and climate-related disclosures, we're able to attract more climate finance and overall capital flows to unlock towards the economy and deepen institutional investment in the organizations and in our capital markets. And this is what the ISSB in particular has been designed to do. Sustainability-related financial disclosures for capital markets dedicated to investors to ensure that there is more specific information that helps to unlock those capital flows. I hope this provides a foundation for the discussion that will follow.
Thank you very much. Thank you. Please be on standby. We'll constitute the panel, and then we'll get back to you. So these are members of the panel. Let me welcome here the Directorate of Accounting Standards, Financial Reporting Council, Dr. Ihai Anyagara. Dr. Anyagara. I'd like to welcome the CEO, NGX Regulation, Mrs. Tinoade Awe. And then finally, the head, Financial Standards and Corporate Governance, Securities and Exchange Commission, Mr. Abdullah Saad. Okay. So I welcome you all. I see you all the time. This is your area. But Dr. Edozie, we also welcome you. You are part of this panel. But what I will do is to let you catch your breath for now and also charge your battery before we get back to you. Thank you very much. I welcome all of you. Dr. Nyaga, let me kick off with you. Following Nigeria's commitment to being an early adopter of the FRS Sustainability Disclosure Standards announced at COP27, could you provide insights into the journey and progress made since this significant declaration?
Thank you very much. At COP27, like Dr. Ndidi mentioned, the Financial Reporting Council of Nigeria led the pack to announce early adoption. We did not just stop at the announcement. We began to put in place measures to ensure that we walk the talk. We created a national stakeholders committee known as Adoption Readiness Working Group, which was formally inaugurated on June 6th, 2023, with a 3-day training building capacity for the adoption of IFRS S1, S2. And the National Committee, the Adoption Readiness Working Group, is made up of the assurance providers. That is majorly the big four. We have the regulators, my friend Saad Absalam, and other regulators, including the National Council on Climate Change. We have other regulators there. We have preparers. We have all that have one thing or the other to do with sustainability reporting. And the aim is to brainstorm, come together, and draw up a roadmap on how to have a seamless adoption of sustainability reporting standards as issued by the International Sustainability Standard Board. And last month, the ARWG met, had a 3-day retreat, and they have finalized the adoption roadmap, which will be exposing to the entire stakeholders, and everybody will know how to go about it. Before I take off, we have also on October 9 published a notice requesting for certain documents for what we call readiness test for early adopters. And that is where we are for now. Thank you.
Thank you very much. Let me come to you, Mrs. Awe. The IFRS in June 2023 launched the sustainability disclosures. And I also recall that in Dr. Edozie's paper, she referred to them, the IFRS S1 and S2. The Lagos launch was significantly supported by your organization. Maybe you want to talk us through what is happening around it now.
Okay. Thank you very much. It's a pleasure to be here. My organization is actually has its roots in another organization that I think may be more familiar. The name may be more familiar. It's called the Nigerian Stock Exchange. And I start from there because the Nigerian Stock Exchange, since the 2012-2013, joined an organization called the United Nations Sustainable Stock Exchanges Initiative. Because as far back as that time, it had seen that sustainability of companies was something that was important and had to be taken seriously, was something that had to be put in companies' DNA. After that, we followed it with like 3 events, including the first Nigerian Capital Markets Sustainability Conference, and then ended up with sustainability disclosure guidelines, which are still in subsistence. And we've continued to work with listed companies as well as our trading license holders, who are the 2 major stakeholder groups within our purview, to try and encourage them and move them along the path of sustainability. So with this background, when the International Sustainability Standards Board came into existence in COP26, it was very easy for us to realize that there would be a synergy. When the Financial Reporting Council became the first entity of its sort in the world representing Nigeria, to state that it will early adopt those standards, again, the synergy was there. And we've had a very good relationship with the Financial Reporting Council over the years. And so it was coming home. It was a natural progression for us. So it wasn't surprising that we were a natural collaborator for the ISSB and the FRC, and that's what you saw in the Lagos launch. Prior to the Lagos launch, we had done some capacity building also with the ISSB and the SASB board, the FRC, to just basically build capacity around the standards. Because it's one thing to have the standards, the important thing is you have to have the capacity to use them. And the standards are reporting standards, they are downstream. Upstream, you have the strategy, you have everything that you do to be able to report. So I'll stop there for now. Thank you.
Thank you. Salam, while she was talking, she harped on the need for collaboration. And that's what I'm taking to your table. You know, collaboration with other regulatory bodies, both nationally and internationally, is essential for maintaining uniformity and efficiency in securities regulation. So could you shed light on 6 collaborative efforts and strategies in this regard?
Thank you. Let me start with the domestic environment. Prior to the establishment of the ISSB, the financial sector regulators under their umbrella body of Financial Services Regulation Coordinating Committee came together to develop some guidelines around sustainability and reporting on sustainability by regulated entities. And after developing that, each sectoral regulator now issued their own guideline to suit their own environment. So you can see under that umbrella body, already issue of collaboration has started. And then in 2021, IOSCO worked jointly with the ISSB to develop the standards. And in the process of doing that, SEC Nigeria, which is a member of the IOSCO, that is International Organization of Securities Commissions, it is an umbrella body of securities regulators across the globe, came together with other regulators from different jurisdictions, met in Egypt to look at the draft standards and revise them, and that led to us having the final version of the standards. And also, that meeting in Egypt served as a capacity building environment for those regulators also to understand why we need to have those standards, what we hope to achieve with those standards, and then when they are rolled out, how do we go about implementing? Now, when the standards were ready but have not yet been launched, again, a body was set up, as Dr. Anyahara mentioned, Adoption Readiness Work Group, which comprised of the Financial Reporting Council, who are driving the process, other regulators, the academia, and then the issuers like MTN, Dangote, and so on, and then the exchanges also. Now, the work of that Adoption Readiness Work Group is to drive the process and ensure a seamless adoption process, which is what we are doing now. Now, SEC being a member of IOSCO, because IOSCO in July, after launch of the standards, IOSCO adopted or endorsed those standards. By endorsing the standard, it means those standards are now acceptable globally to be implemented by all issuers of securities across the world. So with that, it means all securities regulators across the globe have the work of ensuring that those standards are adopted and implemented and are complied with. So we are going to leverage on that cooperation within the IOSCO as a body to now develop and build capacity of our domestic issuers and other stakeholders.
We are having audio class, please. Thank you.
So we are going to leverage on IOSCO cooperation to now build capacity in our own environment.
Okay.
Thank you.
Thank you very much. Dr. Ndidi, are you still with us? Dr. Ndidi? Okay. Maybe I'll come to you while she's still charging her back. Okay, you're here.
Can you? Yes, I am.
Okay.
Not charging my battery.
You know, one of the things that I got from your presentation was Nigeria's commitment to the adoption of the FRRC sustainability disclosures. So why is this important, and how ready is Nigeria to implement this commitment?
That's a great question. Why is it important? These standards are important because it's the first time that we're seeing sustainability standards that are going to be mandatory and global and that are geared to investors and capital markets, which is why the fact that Capital Markets Day today is focusing on sustainability and on these investor-focused sustainability disclosures is so key, because it builds the bridge between the relative data in terms of risks and opportunities and how climate-related and sustainability-related risks and opportunities affect a company's prospects. And by making that data more available and more accessible and more visible, helps to unlock capital flows. So what's very important about the ISSB standards and why is Nigeria so exemplary in its approach is, first of all, you're looking at the three key regulators for capital markets, the SEC, NGX, and FRCN, working collaboratively together with others, together with preparers like MTN, to become standard setters, not just standard takers. So these are standards that we are helping to shape. Secondly, also, because Nigeria has stepped up first, it's at the forefront of also being able to receive access to capacity building support, knowledge sharing, and this is not just for sustainability professionals who are very important, but also, for example, last week we held a presentation for company secretaries across the world, and specifically also accountants who are overseeing financial statements, and now we'll be looking at the risks and opportunities related to sustainability and climate in that regard. What Nigeria has also done is it's set a best practice model in place. Notably, Nigeria is also now the vice chair of the African Association or a forum for independent auditors and accounting assurance regulators across the continent. So in other words, really leading the continent in terms of best practice as to how to approach the standards. What's also important is the GFANZ, and GFANZ, the Glasgow Financial Alliance on Net Zero, and it's not just about net zero, it's about overall climate-related disclosures. They essentially jointly control $130 trillion that have been dedicated towards and are very strongly linked to the ISSB standards. So there's a significant pool of capital that investors are directing and channeling in accordance with the ISSB standards. And again, by the Nigerian regulators and indeed also preparers like MTN taking the first step and deciding that they're going to lead the way, they continue to shape the way that these standards are developed and the way that they are also applied in order to ensure that sustainability-related disclosures don't just help in terms of better enhancing the risk profile of the companies and improving resilience, but also unlock the necessary capital flows. Maybe what I'll do is I'll close by speaking right now from Beijing. And earlier today, when I walked across the city to get to the board meeting, I walked past a major crossing. And the major crossing, in spite of the fact that I was looking at approximately 200 cars moving at the same time, was entirely silent. And it suddenly struck me actually that most of these cars are actually electric cars. And we know that 20 years ago, China was nowhere where it is today. And China is indeed, in fact, one of the conversations I had was with the chair of 1,000 companies, 1,000 Chinese companies that are looking at the African continent and are looking at the ISSB standards as a way to connect the way that sustainability-related information on the African continent, and they were specific about Nigeria, is disclosed in terms of being able to channel their own capital towards entities that are better profiled to succeed, bearing in mind risks and opportunities of a sustainability or climate-related nature. So I think Nigeria is doing extremely well in terms of leading the way and stepping up, and in terms of embracing and charging ahead in terms of its leadership on adopting these standards in such a manner that we can deepen capital markets and improve capital inflows into the entities that drive our economy.
Thank you very much. Thank you. You see, one word that jumped at me from the four of you is adoption, and I'm probably taking that to you, Dr. Henry. The inauguration of the Adoption Readiness Working Group in June 2023 is regarded as best practice benchmark for other African jurisdictions. What notable accomplishments and challenges has the group encountered in its efforts?
Thank you. Thank you very much. In fact, the modalities for the ARWG created a very good, robust framework where other African countries are actually looking up to Nigeria, because we did not adopt a model where one regulator will sit and make pronouncements. We adopted a model where, like I mentioned, all relevant regulators, the preparers, the assurance providers, other relevant stakeholders come together and look at the best approach towards having a seamless adoption. And when you do such a model, you are invariably getting general buy-in, rather than sit down and push it out to all. And when we created that, for instance, the issuers like the MTN, the InterSwitch, the Dangote, they sat along with regulators to decide on the best approach. And when the group agreed, it becomes quite easy to adopt, rather than just push the standard as it is. And we are also creating some other modalities. For instance, advocacy. How do we reach out other groups and let them know why we are doing what we are doing? It's not just adopting standard for its sake. The sustainability reporting standard is expecting you to say what you are doing. And therefore, we look at it as creating a corporate behavioral change that will enable us in Nigeria and the whole of Africa to easily get these available funds elsewhere. So I see it as a model, and we have been receiving requests from other African countries to showcase what Nigeria is doing and what Nigeria is doing well. In this case, we have also categorized the adoption into phases. Those who have done significantly well in sustainability reporting prior to the issuance of IFRS S1, S2, we looked at them and requested them to elect to be early adopters. So in this case, they are not being forced, they are not being mandated. So we are working with them, assisting the issuers to be able to get it right at the very beginning and always. So that makes it quite unique to my own feelings. Thank you.
Thank you very much. Mrs. Aware, there's a little bit of quandary here. Stakeholders are demanding more sustainability disclosures. And it is apparent that some companies are not doing so. How do you bridge the gap as a regulator?
Thank you. So I think for us at NGX Redco, there are lots of tools in the arsenal of the regulator. One of the tools, I think the most extreme tool, is to say, well, you've got to do it and crack the whip. But sustainability is a DNA thing. It's not something that you want folks to just be ticking boxes, because it will blow up, and when it blows up, the entire market will have repercussions, because then people start suspecting the reports that come out of this jurisdiction. And so right now, we have two main things we're interested in. One of them is awareness, and the second one is capacity building. So we're not interested in cracking a whip. We're interested in getting people that run companies to realize that this is something that has come to stay and it's not going anywhere, and that if they don't pay attention to it, the source, which ultimately is funding, will dry up. That's number one. Number two, once we get that awareness, and you need to get it toned from the top at the board level, once you've gotten that awareness, the second thing is, well, we don't have the capacity. We've never done this before. We've been doing financial reporting. What is all this sustainability reporting about? So that's the second place where we're engaging. Now, with respect to number one, we're collaborating. So we recently collaborated, and there might be people in the room who responded to this survey, on a survey with the Society for Corporate Governance, where we basically sent out to try and find out from companies, listed and unlisted, what's the temperature around sustainability, the understanding and ability to actually apply the standards correctly in Nigeria. That survey has ended. We're working on the results now, and we'll provide the results to the FRC, to the SEC, anybody that we feel will benefit from having those results. With respect to capacity building, we're working with stakeholders within the capacity building chain to try and have and provide capacity to our stakeholder groups. One of such capacity building we did with the ISSB and the FRC in June, where we took them through the SASB standards and just a general understanding of S1 and S2. When I come to, and my colleagues come to events like this, it's also partly to make the awareness, to project our voice using collaborations and platforms like this, and the capacity building as well. Thank you.
Mr. Abdulsalam, a lot of people believe that we live in what they call the gigabyte-infested world. Technology is here, digital assets are here. So how is SEC adopting its regulatory approach to accommodate these changes while ensuring market safety and investor confidence?
Okay, the SEC used to be, do I call it manual? Yeah, it used to be manual, but now our operations have shifted from manual to digital. Applications are received electronically, processed electronically, up to approval stage. For market operators who are seeking licensing in to operate in the market, prior to now, you have to travel all the way from Lagos to Abuja to attend registration interview or registration meeting, but now everything is done through virtual means. So with that, we are now shifting and aligning. And the Commission in the last 2 years is involved in IT transformation project, which is highly capital intensive with so much funds being spent. We have really gone far with that project with the support of some development partners. Now, by the time we conclude on that transformation project, everything around the SEC is going to be electronic. So with that, we are now aligning with what is happening globally. And then you mentioned something about digital assets and so on. In 2022, early 2022, the SEC looked at what is happening around the digital space. We've been working to come up with regulatory incubation project for fintechs. Now that has come to fruition because we have started bringing in those fintechs into that regulatory incubation space so that we can now assess how risky are they before we can allow them to go into the market, so that we don't want a situation where somebody will just go into the market just like that and cause serious catastrophe. So we develop in concert with the central bank, with the NFIU, we sat together to come up with regulations around issuance of digital assets, digital exchanges, and so on. So a lot has been done. The regulations are there, the frameworks are there, and we have also received certain applications from people that have shown interest in all that. So with that, I believe we are going along the path of digitization that will take us to the dreamland.
So you are digitally compliant?
We are digitally compliant because of recent management issued a policy notice to all staff that henceforth no more paperwork, because for two reasons. One, we are becoming digital. Two, we are saving the environment. Paper is made out of wood that come out of falling down of trees, and that is creating a lot of environmental hazard. So by the time you eliminate or reduce, drastically reduce of paper, you are saving the environment.
Thank you very much. Dr. Odide, are you still with us?
I'm right here.
Okay, you know, one person that is very digitally compliant is you, talking to us all the way from Beijing. We appreciate you. Thank you very much. But one of the things I'm looking at is, why are these disclosures very important? And how can they help support market development in Nigeria?
So if I go back to the comment that was made by Teni earlier today, where he talked about, Nigeria being taken off the frontier and the consequences that has. or if you look at it from the perspective of ESG rating entities, or even credit rating entities, some of the times African companies and Nigerian companies in particular are blacklisted or given poor ratings because they don't have the data. And so this really is an opportunity. If you think about the ISSB standards, they are the IFRS sustainability standards, and they have now been endorsed, as was mentioned by the panelists, by IOSCO. IOSCO oversees securities and exchange commissions, including that of Nigeria, of 130 countries. In its history, the only other set of standards that have been endorsed by IOSCO have been the IFRS accounting standards, which are applied across 140 countries and almost every African country, and specifically Nigeria. So the fact that they have now endorsed the sustainability standards means that we're looking at mandatory sustainability-related disclosures that are specific toward investor use and providing the kind of data that investors are looking for in order to make investment decisions. And what's really important to Africa and to Nigeria specifically right now is to present itself in such a manner that it can unlock the significant capital flows that are out there. Look at the continent. It has 4% of global emissions, almost negligible. And it has so much nature capital that currently is not valued and is not actually captured in the books. So there's a huge opportunity here in embracing the ISSB standards as the regulators and some early adopters in Nigeria have already done, to continue to shape the standards and make sure that the standards can be applied without undue cost and effort by Nigerian companies, and also the global supply chains and local value chains and supply chains, that is the smaller entities that also need to disclose in cost-effective ways. The reason why it's so important that we're doing this on MTN Capital Markets Day is because technology actually has a critical role to play in terms of, one, being able to allocate, find that data, report that data, and do it in a way that the data is robust and verifiable so that it can be used by investors to allocate investments. So the prayer really is Nigeria will be a test case, will be an opportunity and an example of leapfrogging and leveraging sustainability-related disclosures that speak very specifically to the risks and the opportunities that are linked to climate and overall sustainability opportunities and risks to unlock the capital that is required by the economies. I think that I want to applaud the regulators around the room for being so open and collaborative in the approach that they're taking to adopting these standards and implementing transitional reliefs so that it's easy for companies, or relatively easy for companies to adopt. I also want to applaud those preparers, those issuers, those companies that have stepped up first. And I will remember very vividly that in June, when the ISSB standards were launched, that MTN's chairman stepped up and indicated that they will be voluntarily adopting these standards, also because they want to lead the way and make sure that the standards are fit for purpose for African companies. And so the ISSB is listening. Nigerian companies are members of the advisory boards within the ISSB, and we continue to work on and enhance these standards, and more importantly also provide capacity building support, knowledge. And so it's a huge opportunity for learning, also for our younger generation who are very interested in sustainability and want to apply sustainability towards building new types of businesses, new types of jobs, also digital, but also green, that really create brand new economic opportunities that we so desperately need at this time.
Thank you very much, Dr. Now the floor is open. We'll shift the conversation to the audience, both online and present here. We have our regulators in the room. We have our questions. You've listened to them. And even Dr. Ndidi is listening to us from all the way from Beijing. Please raise your hand. They'll bring the microphone to you. Do we have hands up? Okay.
Hi, my name is Farouk Mia. I'm with All Africa Partners based in London. I think everyone appreciates the importance of sustainability and everything that's been mentioned, but how can that be balanced with the extra administrative burden and the extra work that comes with this, particularly for markets which are, you could argue, in their infancy, for companies which are in their infancy, and as the CEO of the stock exchange mentioned, there's a long list of to-do other priorities. So how can that be balanced with sustainability? Thank you.
Did you three get the question? Please, maybe you might run it again.
Sure, sorry. How do you balance the extra administrative burden and extra work that comes with sustainability versus the infancy of African stock markets, the infancy of some of the corporates, and the long to-do list that is already present for African markets?
I'm sure Mr. Awe got that. Yes, okay. So can we take two more? Two more? All right. So, Mrs. Awe, please, can you respond to that?
Thank you very much. I think certainly there is a long list of things for companies to do as they prepare themselves to be attractive to investors and a host of other stakeholders. And I think that the way to think about it is to think about it from a long-term perspective. So the folks who want to invest in those companies do have a concern about what companies are doing on the environment, what they're doing about social issues, and what they're doing about governance issues. And so if you say as a company, I'm too young or too small to be bothered about that, you're just kicking the problem down the can, because you will get to a level of maturity when you may need the type of funding that will insist that it wants to go into those issues. And so we always say to companies, start reporting something. And actually, when you go into a strategy session and you look, you will often find that the company is actually doing a lot of things along these ESG lines, but because they're not reported, because they're not part of the strategy, they're left on the table. I know of consultants, for example, who have worked with hospitals. Somebody was telling me about working with a hospital in another African country. And just in the manner in which the hospital was separating its waste, that in itself was an environmental issue. But because it wasn't in strategy, it wasn't a data point, they weren't taking cognizance of it. The thing is that if we don't do anything, it's one of those things where if you don't do anything, the sources of funding will dry up. And so my own advice to companies around this is, yes, acknowledging that it is a burden, yes, acknowledging that there has to be proportionality. And I think when Ndidi was talking, she talked about NGX Redco being one of the voices on the adoption working group that is always saying businesses are in business to do business. They're not in business to report, or they're not in business to do a number of other things that may be necessarily important to a whole set of stakeholders. But they have to pay attention to these things. So the proportionality is important. The burden can be taken on when you outline your strategy and incorporate that strategy not as a separate strategy, but part of your general strategy, incorporating these ESG matters into it, and then you proportionally pace yourself to deal with them. But doing nothing is not going to work anymore. There's too much money chasing after impact. There's too much funding chasing after sustainability to ignore it. And very soon, especially if you check around the world, I'll just give this one last example. You remember when the data protection rules came out? It was when the European data protection rules came out that I think the world sat up. Well, the Europeans are also involved and interested in sustainability. So there's a coalition around the world now, the ISSB being the one that has the greatest influence around the world, but you have jurisdictional movements around this as well. So it is not something that anybody can ignore. And I think the answer is in the proportionality in which you deal with the issue. Tell your story and then keep to that story and continue along the journey. But not doing anything is disastrous and a way, I think, for a company to die. Thank you.
While you were talking, the two men here were raising their hands. They had perspectives on it. Do you have questions from the audience so that you can have that perspective? Okay. If you don't have questions from the house, you can share that perspective and then begin to have your... Okay. All right, please.
Good afternoon. My name is Ivana Osagi, and I actually run an ESG consulting firm. I've been hearing a lot about the need for companies to do the sustainability reporting, and as Mrs. Awes said, that is something that is further downstream. But I think also we need to focus on the upstream side of things. So I always say to my clients that one of the good things about ESG is that it actually gives you a framework for you to manage the sort of issues that you're dealing with, especially at the board level. So my question is, what sort of messaging are we giving to boards to enable them to engage and drive ESG and sustainability at the board level so it cascades down the organization? And we focus on the upstream side rather than just focusing on the reporting.
Okay. Please, your final word, please.
Okay, thanks. The message we are giving to Bob, for me, is the tone at the top drives all the things we are doing. We are talking about ethical investment. We are talking about the planet, the people, and profit. That the board should not be looking at the profit alone. They should be looking at doing things today and conserving the nature. And that when they are thinking about sustainability, they are thinking about innovation. Innovation brings about a lot of issues, and they have to create the governance framework. If you are using the TCFD pillars, they have to create the governance framework. And after the governance framework, of course, embed the sustainability issues, the ESG issues in their strategy. And of course, you look at the opportunities, the risks there, of course, set your targets. So the board drives all the things we are saying, and that's why even in the readiness test, the Financial Reporting Council issued on October 9, one of the first requirements is board approval. That the board has approved that you are going to do this. You can't do any meaningful thing without the board giving you the go-ahead. And we need to see it run down all the other things we are doing. And again, for me, we are talking about corporate behavioral change. Most times we look at profit without looking at the impact of our activities on the environment. And now, can we do it better and still make the profit we are looking at? Yes, we can. And that's where the innovation comes in. And you can't do it without the board driving it. That's my own take on it.
Thank you very much. Our conversation is gradually coming to a close. Our time is almost up. Any concluding comment? 1 minute.
Okay, so I will just make a comment to address the concerns raised by the two people that asked the question. Let's look at the cost benefit in doing things. Globally, attention is shifting to sustainability issues. what impact is your business making on the environment? What impact is it making on the society around your business? Be it your employees, be it the community you're operating in, and so on. How is your business being managed? Are you looking at your own interest, or you are looking at adding value to your stakeholders? So for investors to invest in your business, they are looking at how sustainable is your business. If you are not complying with the global standards on sustainability, nobody will do business with you. And at the end of the day, to raise the required capital to fund your business will be a challenge for you. So you have to look at, yes, it comes with additional cost, but what is that cost compared to the benefit you stand to derive when you comply and you now disclose? Because when you make disclosures, you say, oh, this is how I do it, this is what I have done, I have avoided certain implications by doing this, and so on. People will always be happy to say, oh, yes, your business is ethical, your business is compliant, and also let's look at what benefits companies derive from implementing international financial reporting standards. Your financials and your businesses becomes globally comparable. And you are speaking in the same language a company in China, in US, and so on is speaking. So look at all those benefits, and then I assure you will forget about the issue of additional cost. Thank you.
Thank you very much. I want to say thank you to members of the panel. Yes?
This is me.
Okay.
This is Indidi speaking.
Okay.
Called the Chief Value Officer.
Okay.
Partly because, through sustainability reporting using the ISSB standards, you're also talking about how does a company create value? How does a company create value for its stakeholders, for the society, for the economy, and how does it use its natural resources? So in other words, what the standards do, and I get the point about, the cost-benefit analysis and also being concerned, the concept of proportionality means that one is trying to implement these standards without undue cost and effort, and also taking into cognizance the skills, the capabilities, and the resources of the entities that are reporting. So for example, in the implementation of scenario analysis, you can actually start with a qualitative report and work your way towards a quantitative report, so that sustainability reporting is a journey. You don't report, if you're a smaller entity, in the same way that a larger entity reports, but principle-based, you are reporting and you are disclosing. We must also remember that we're becoming much more sophisticated in the uses of estimates. So rather than having to collect primary data, which is more expensive, you can actually apply estimates in order to report. The most important thing is to be able to provide data as opposed to leave a gap, because that data is critical for investors to make decisions, and also for you to be able to make projections. So ultimately, leveraging the TCFD pillars, which are governance on the one hand, the board's leadership is absolutely key in setting tone at the top, but secondly, also strategy. And strategy involves the whole organization. It's not just the sustainability function, and also not the financial function alone, which now is leveraging its know-how of the accounting standards to now build in sustainability-related financial disclosures. The accountants are unleashed, but the whole organization is unleashed to help build a strategy for business resilience that is focused specifically on the risks that may impact the business negatively, or the opportunities that may unlock future cash flows, reduce the cost of capital, and attract new capital, so that you're reporting on targets and metrics that help you and that make it worth your while, so that the financial effects or the cost of reporting is mitigated by the potential that it unleashes in terms of business resilience, and also attracting capital flows, and also blended finance in order to invest in that business. So it's really sustainability-related disclosures, very, very much linked to being able to grow the businesses and estimate the business's prospects and future cash flows that are going to be impacted, whether we like it or not, by sustainability-related risks and opportunities. So to ignore that they're there is actually to damage us more than to embrace them. And just to assure you that because of the potential challenges and because it's a learning curve is the reason why proportionality has been built into these standards so that they can be used by different actors according to their level of skills, resources, and capabilities. And so generally, we're all on a learning curve, and we all have the opportunity to really improve business resilience holistically, starting with tone at the top, but working its way through every single department within the organization so that we're building strategically better prepared entities that are more resilient and also attractive to investors who are looking at the ESG lens and the sustainability factors as a key criteria to decide on whether they invest or whether they don't invest. And so not addressing the issue, which is a huge issue in Nigeria, of not having this data available is going to be detrimental. So the fact that we're a step ahead is a good thing. The fact that the regulators are aligned with the preparers in working towards this, the fact that policy is behind this, and the fact that it's a global phenomenon and one truly global baseline means that instead of reporting according to a number, and at the moment there are up to 600 voluntary sustainability standards, at least now we have a truly global baseline so that you can work with the ISSB standards and it's interoperable with Europe's standards, for example, so that if you're doing business with Europe, by embracing the ISSB standards that are shaped by Nigeria and by Africa, you are actually able to report according to standards that meet the circumstances that we're in and yet still comply globally in order to attract the capital flows that we're looking at.
Thank you very much. Thank you. And let me also say thank you to the panel here. Dr. Didi, we appreciate you. Thank you, Mrs. Awel. Thank you, Mr. Abdusalam, and thank you, Dr. Ainara. Thank you very much. You've been a wonderful audience. Let's appreciate them as they step down now. Thank you. Yes. You want to hear your... Mr. Torella? And Mr. Moduka, please can you join us here for the photograph? Thank you very much. Thank you. And so, distinguished ladies and gentlemen, I want to say thank you to all of you for being here and patient since morning till now. I want to thank all of you for the dinner that we're holding at the This Day Dome. The bus will be ready at 6:30 in front of the hotel to take people down there so you can have a wonderful time. Tomorrow morning, 9 a.m., everybody should be here for day 2 of the Capital Market Day of MTN. So until tomorrow morning, or maybe until later this evening at the dinner, I think the CEO wants to say a few things. Please hang on, the CEO wants to say a few things.
Okay, not that much to add other than tomorrow we are going to have the privilege of hearing from Honorable Mr. Dr. Bosuni Tijani, Taiwo Edede, who is the chairman of the Presidential Advisory Committee on Fiscal and Tax Reform, and And then, of course, tomorrow is the day which contains most of the MTN presentations from the MTN team. You'll be hearing from myself very briefly, from Modupe, the CFO, from Hassan, the COO, on the connectivity business, and then from Eli Hini, our head of mobile money. So tomorrow, lots of action, lots of key messages, speakers. So please be here 9 a.m. sharp tomorrow. Thank you very much.
Thank you. Thank you, CEO. We appreciate you. Thank you very much. 9 a.m. tomorrow morning, but dinner is tonight. The boss will be ready at 6:30 in front of the hotel. Have a wonderful dinner. How do I remove this?
In the years that we've been in Nigeria, MTN set up a foundation. We believe so much that our success as a business is tied to the well-being of the people in the communities that we operate in.
To the Grow with Global Digital Skills Training in partnership with MTN.
With this laboratory, our nation is well positioned for technological advancement, research and development of global standard and relevance.
We must work to break down the barrier and foster an environment where we feel safe, respected, and encouraged.
We reaffirm our commitment to breaking down barriers and fostering an atmosphere of inclusivity for our different but equal brothers and sisters. We are so grateful that we are able to do what we do. Kudos to our partners and stakeholders in both public and private sectors. We will continue collaborating with those who share our vision